Well, good morning, good afternoon, good evening, everybody. I am Paul Brody. I am the global blockchain leader at EY, and I want to welcome you now to the start of our 2021 Global Blockchain Summit. I'm going to be your host, your MC, your official spokesmodel, some bad entertainment for the next few days, and tell you about what we've got going on. This is our 5th annual Blockchain Summit. Unfortunately, it's our 2nd annual clothing optional summit, at least for the attendees. Which is a phrase I did not think I was going to have to repeat after last year, but that's how it's going to be this year. And we're fully virtual, we are fully live. So you may even see real demos. You will see real demos, and you'll see real mistakes as well. This has been an absolutely unbelievable year in so many dimensions, but certainly first and foremost in blockchain and crypto, it has been transformational. For those of us who have been in this business for a long time, like I have, I think now 7, 8 years almost, it feels like something like vindication to see kind of all the things that have gone on in our direction this year. And that has been incredibly exciting. We're entering now the 6th year of EY having a real blockchain business. We are 20 times the size that we were 5 years ago. And we'd be larger if we could hire more people or develop software faster. So from a business perspective, things are truly amazing. And it's strange too, because we're 20 times larger, and here I am still standing in a room by myself. But the good news is I know we actually have an online audience. So I can't keep track of all the who said what to whom on Twitter, but I do know that this business has been great for almost everybody in it. If you have been a beneficiary of this good fortune, even if you don't have $1 billion of doggy tokens or crypto tokens of any kind, Shiba Inos or whatever, you can share some of that. The pandemic is not over in many parts of the world, especially India and Brazil. So having kind of made that key point, let me move on and talk about our agenda for the next few days, because I think it's really exciting. Today, as we did last year, is all about the big picture. It's all about where we see blockchain technology going, the cryptocurrency ecosystem, especially Ethereum moving forward. And then what we're doing is we are opening up our summit to our education and training programs that we normally have every year, but are closed and are only for EY people. So Wednesday, Thursday, and Friday of this week, we have focused on a set of master classes around kind of deep dives in topics like tax and finance and technology and privacy. And I'll come back to those in a second. For our agenda today, we're going to start off with a bit of a big picture vision from myself, and then I'm going to hand it over to my colleague, Chen Zhuo, who's going to be leading a panel discussion on the emerging kind of digital asset ecosystem we're seeing take place. And then we'll talk about the emerging industrial ecosystems that are starting to form. And then I'll be back to talk about the decentralized tech stack, because I am a huge believer in the decentralized tech stack. I think it's going to be the next gargantuan business in the blockchain ecosystem. And then we're going to finish up today with a couple of important items. First of all, a quick spin through blockchain.ey.com, which is our own blockchain technology tech stack, and some demos. And then we have a fireside chat at the end of the day today with Jeremy Allaire, who is the CEO of Circle, right? And they're the makers of USDC. They are the company with literally the single most important blockchain asset out there in the Ethereum ecosystem, more than 15 billion USDC now in circulation. So today, big picture, and all about the ecosystem, which is our theme. Tomorrow, we're going to dive into manufacturing and public sector, which is going to be really amazing. We're going to talk about our public finance management. We're going to talk about how blockchain can be a tremendous force for public good. And we're also going to talk about the manufacturing sector and how manufacturing ecosystems are finally maturing and starting to really interact with each other. Thursday, deep dive, all about accounting, tax, and financial services. By the way, speaking of accounting, I want to welcome all of our viewers from TikTok. I do want to apologize if there's any confusion about what accountants do at EY. EY is a real place where real accountants work. It's not a euphemism, and all of our accountants, they work fully clothed in the office when we're allowed to come back to the office. So I do want to promise there'll be no 1-minute dance videos in the event today, but you may still find this very useful. And if you didn't understand any of that, just look up what a TikTok accountant is. All right. Like I said, Masterclass is tomorrow, manufacturing and public sector. Thursday, finance, tax, and accounting. Friday, really fantastic conversations on privacy and scalability. Got a keynote from Barry Whitehead talking about the limits of privacy technology. And then our scalability team and our engineering team are going to take us through some of the work that we've been doing around zero knowledge proofs and building a business logic zero knowledge proof compiler. Finally, before I go into my keynote talk, a couple of key thank yous. I want to thank JT Nicole, the Ethereum Finance Forum, the moderators of Ethereum Finance, as well as Ethereum itself, that community, and the Ethereum staking community on Reddit. These are amazing communities. You want to learn about blockchain, you want to learn about finance, this is the place to do it. It's also where you will find in the ETH Finance blockchain segment on Reddit, the AMA and the thread for today's conversation. So if you've got questions, comments, complaints about my t-shirts, that is the place to put them. Finally, get your NFTs. Now, our legal department assures me that we should make no claims about how the NFTs from our summit will be worth millions of dollars in the future. But just in case, I definitely recommend scanning the NFT QR codes that you'll see on screen between speaker slots today. And those are only valid if you're watching the live stream. So they're valid until about 4 p.m. Eastern time each day. So you want to collect all 4 NFTs. All right. With that, let's get into our presentation. And our summit theme this year and our vision is called Assembling the Ecosystem, because we really believe what's happening over the last year and heading towards the future is not just a selection of individual applications that are going on blockchain. Where we are headed in the future is the creation of a really globally integrated digital ecosystem. And that's what we're going to talk about. I want to start, though, by just addressing something that is kind of on a lot of people's mind, which is, okay, feels like a little bit like a bubble. Is it different? And I believe, yes, this time it is different, right? It's different because it's much bigger. I mean, we thought things were big last time. It's enormous in terms of the global market cap of digital assets, especially Bitcoin and Ethereum. But it's also different because if we go back to 2017, the last time we had one of these kind of big run-ups, the world was different. It was all about the potential and not the reality. And back then, we made 4 important predictions about what we thought the future would be like. Number 1, we believed that the world would be moving from private blockchains to public blockchains. Number 2, we felt that we'd be moving from notarization, like companies timestamping documents on the blockchain, which seems kind of pointless now in hindsight, towards tokenization. I can't put a notarized document into a DeFi ecosystem, but I can put a tokenized asset into a DeFi ecosystem. Crypto assets, right? Crypto assets are enormous and they're important, but enterprises, governments, lots of individuals, they want to transact in fiat currencies. And so the explosive rise of fiat currency tokens has been important. And then finally, the crypto ecosystem is merging and integrating into the real world economy, right? These are not separate things anymore. They are one and the same. They are together. They are increasingly regulated, whether some people like that or not. That is the future that we are experiencing. Now, back in 2017-18, we were not delivering. We were great at raising money, right? ICOs raised a lot of money. They didn't actually do a very good job of actually delivering products and technologies. And the percentage of ICO companies that ultimately delivered any kind of prototype or solution was only about a quarter. So in some ways, by a measure of venture capital, it was something of a disappointment. But that hasn't stopped this market from maturing substantially. And one of the great metrics of that is consumer demand for crypto assets, right? Where consumers lead, enterprises and governments follow. It used to be that governments and enterprises, the people with big money, made big investments in technology. But the truth is today, real innovation is led by consumers, and the consumers are leading with their demand for crypto. Now, right now, only about 10% of all American consumers have some kind of crypto asset. You can see a whole bunch of different kind of estimates there, but we think it's about 10% based on our look. Just to give you a sense of how much potential there is, 55% of all Americans have some type of stock or bond or mutual fund. So this market is at least has the potential to get 4 to 5 times larger than it is today, possibly even bigger than that. More importantly, I think access to crypto assets is a commodity process, and it's rapidly commoditizing. So we have an ecosystem now where we are moving from giving people access on the blockchain to Bitcoin and Ether through their existing bank account or transaction system. So you'll be able to open up your app or your bank or your broker and buy. You'll have dollars, but you'll also be able to have Ether and Bitcoin and so on, right? Where I think we're headed, though, is two-way traffic. So it's not just that consumers want access to these systems. It's that also the existing financial infrastructure wants to tokenize all those assets, those trillions and trillions of dollars of assets, and wants to put it to work in the DeFi ecosystem. And there's absolutely no question that DeFi is the engine of innovation here. So the access to crypto assets is commoditizing, and by the end of this year, I think it'll be very widespread. But it's this explosion of DeFi which is really kind of driving this marketplace forward. And you can see here, right, it's kind of an astonishing chart that shows that we went from having just a couple of stable coins a couple of years ago to having this gargantuan ecosystem. And this gargantuan ecosystem is one where interoperability means that tokens that are created by one party can be used by others. And this is very exciting. It's something that we really can't do in other types of business ecosystems, and certainly not in the traditional financial services ecosystem, right? The decentralized nature means that we have a level playing field. The interoperability that we get with tokenization means that I can take an ERC20 and I can plug it into all kinds of different smart contracts, deposit contracts, lending contracts, yield finance contracts, right? So I can create lots of quick opportunities without having to build a whole separate ecosystem. So this makes DeFi a really, really high growth ecosystem. And very importantly, it is a permissionless ecosystem. And I think when I hear people talk about the value of blockchain technology, they're always quick to talk about decentralization. And I'm a huge believer in decentralization. But we often forget that there's two other really critical ingredients. Interoperability, tokenization, ERC20, 721 standards, they give us true interoperability. And very importantly, permissionlessness, which is a mouthful, the permissionless nature of blockchain ecosystems means you don't have to get permission from other parties to use the components they have created in your product. And we all know, let's be honest, if you go and ask permission, the answer is always either A, no, or B, let me form a committee and we'll get back to you in 6 months. And then the answer will be no. Now, I spend a lot of my time talking to the executives at some of the world's biggest companies, especially in the financial services ecosystem. And I feel like sometimes we're at risk in the larger industry community of making the same mistake that some companies did at the beginning of the internet era, right? And if we go back to the beginning of the internet era, and I'm a huge fan of learning history, because I think if you don't learn the past patterns of history, you're at risk of repeating them. But if we go back to the beginning of the internet era, what we started was with some very simple digital building blocks. GPS, we had mobile data, right? We had smartphones and things like that. And what we did immediately after that was create very predictable results. And in many cases, they were worse than the offline version, right? Online catalogs that were terrible, right? Maps and directions that always led you in the wrong place, right? Social networks that didn't seem to function very well. So we created a bunch of stuff that initially was very bad. And if you were like me, I once spent an entire weekend ripping all of my CDs and was about to enjoy them on Sunday evening when my hard drive crashed, right? It just sometimes feels like more trouble than it's worth. And I have seen top executives in banking and finance look at DeFi and say, well, you got lending, you got borrowing. I mean, you can do that with us too, right? So it's easy to dismiss the early versions of this technology. But what happens is over time, first of all, these early versions get better. They get much better. But secondly, they start to produce derivative innovations, right? We got ride hailing by combining maps and directions with GPS systems and reputation systems that came out of online auctions. And suddenly you have not just ride hailing, but food delivery and crowdsourcing, right? And thanks to social networks and reputation systems, suddenly we have influencer culture, right? And what we end up with is things that are very disruptive, although you might be able to say ride hailing seems logical if we look back on history. But eventually where you end up with are what things that I say are on nobody's bingo card, right? Stuff that is really surprising and genuinely new, which is this idea of celebrity chef driven cloud kitchens that are successful restaurants where the celebrity can't cook. They're just an Instagram influencer, right? They have no restaurants, they have no drivers, and all the food is delivered by a crowdsourced ride sharing service. Could you have predicted that 20 years ago? Absolutely not. And if you could, you'd be an extremely rich person and you'd be retired by now. So if I have one thing to say, it's that the most underrated property of blockchain technology, especially public blockchains, is the permissionless nature. Now, if I have sort of a closing thought on this, it's very simple. There is no such thing as permissioned innovation. There just isn't, right? If you want innovation, it's going to be permissionless and it's going to be of necessity disruptive. Now, one last thought I want to bring up is just the future of fiat currencies. You'll hear a lot talk about central bank digital currencies. Fiat currencies are what people want, right? And we see this now. We are on track. Last year, we did $1 trillion in US dollar transactions on the Ethereum blockchain. This year, we are currently trending towards 7 trillion, right? This is starting to be, as they say, a billion here, a billion there. Suddenly you're talking about trillions of dollars. It's real money, right? And regulators are starting to endorse and manage and look carefully at the use of fiat currency tokens as regulated, accepted methods of transferring money. And as a consequence, I personally believe that fiat currency tokens outside of China, we're likely to see them as the future of central bank digital currencies. Okay, let's talk about where things are going, because if the last 12 months has been kind of an incredible run, we are really truly just getting started, right? And you'll see all the pictures of Starlinks flying around in the EY blockchain stuff. It's because we have this idea that in blockchain, you have all these participants who are in an ecosystem, they are moving together, they're in the same direction, but they're all independent, right? And where we are headed, I believe, is the decentralization of almost everything, right? Finance was just the first. So if you take a supply chain, right, buy, make, move, store, and sell, that was taught to me early on as the simplest way to talk about a supply chain. Finance, we have DeFi already, and we have barely penetrated DeFi into the business operations, purchase order financing, working capital, inventory financing. But why should we stop there? Why shouldn't we have decentralized systems, procurement, manufacturing operations, logistics planning? All of these systems should be decentralized because companies don't operate by themselves anymore. They're often part of an ecosystem, and planning is increasingly a shared function. One of the things that we'll be showing later on today is a product called EY OpsChain Network Procurement. And not only does it allow you to create business contracts as on-chain smart contracts, but will allow you in the future to invite your business partners to share in your contracts. And if we have decentralized finance and we have decentralized systems, we will also eventually have decentralized operations. We will tokenize the availability of raw materials, 3D printing capacity, air freight capacity, warehousing capacity, dealership capacity, you name it. It will be tokenized, it will be decentralized, and will be deployed into a marketplace. So we're all headed in the same direction, but some of us are truly getting there faster than others, right? And if I have a kind of thought about this, it's why is it taking so long for industry versus, say, finance? I have a couple of thoughts about this. Number one, industry got distracted by private blockchains, which sounded great, but really didn't deliver. Designed by committee, all those consortia don't do things faster than individual enterprises. Real world integration, it's hard, right? Finance is all digital, right? It doesn't require a huge amount of physical data integration, IoT systems, right? Community protocols, they take time to develop. And of course, regulatory policy also becomes quite important. So I believe industrial ecosystems are going to take time to develop, but they absolutely are coming. And if I have some excitement, it's that over the last few months, there seems to be a broad realization that private blockchains do not now and will never scale, right? So we shared with you some data last year, which I love so much, research we did with Forrester that is worth repeating, right? Because it always makes me happy to see this slide. And it just sort of points out the absurdity of private blockchains. We talked to 230 companies that had implemented private blockchains. And of those 230 companies, about 1% had joined an industry consortium, actively using their industry consortium blockchain. Another 1/3 are a participant in somebody else's network. And let's be honest, when your biggest customer comes to you and says, would you please join my blockchain? They're not asking. They are definitely not asking. They are very politely telling you need to join. But the silliest thing is that that leaves 2/3. What that means, if you do the math, is that for every one company that was willing to join somebody else's blockchain, there were 2 companies that started their own. That is not a recipe for scale. And sure enough, if you ask companies, what do they want to do next? The answer is overwhelmingly, they want to go to public blockchains. Now, not only is there no ecosystem of other participants, there's also no ecosystem of other business partners. And sure enough, a lot of these industrial or sort of specialized private blockchains, they only have the type of company that they're transacting with. And so already, when we surveyed companies again this year with Forrester and in cooperation with Dell Computer, right, we got survey data back that said companies are concerned about being locked in to a particular limited set of suppliers compared to the incredible competitive free-for-all that exists on the public blockchains. And they already believe that their existing supplier networks are not competitive enough. So the incentive for companies to move to public blockchains is very powerful, right? How do we get there? How do we turn this decentralized everything vision into reality? I think 3 key things. Number 1, better regulation, more mature regulation. Number 2, maturing of the protocol model. And number 3, cross-chain integration. So let's start with regulatory compliance, right? Are regulations moving fast enough? The answer is certainly making significant progress. European Crypto Framework is amazing. The SEC and the OCC in the US have both increased the level of clarity. It's still a patchwork and it's still incomplete, but there is emerging maturity in a number of areas. And the truth is, there's just not going to be any special shortcuts, right? So I believe kind of the progress that we're making in this space is very, very positive. I'm going to skip a couple slides here for clarity and speed, but then I want to come back to this topic of the protocol economy. So the protocol economy is moving forward very, very nicely. Governance models are being stood up, right? Incentives and staking models are maturing, and we have much more mature operational design. So how do you know if your industry is ripe for decentralization? I would say there's a couple of key clues. Number 1, right, we've got a couple of key capabilities around tokenization. You've got to have product tokenization. Can you tokenize a product? And you've got to have governance tokenization. And within that, right, can you commoditize the product? It is standard enough that I can tokenize it. And is there shareable capacity? If there's no shareable capacity, maybe that's not really a point. Secondly, can we run a good governance process? That means we've got to have objective criteria. Did you deliver the service or not? Is there access control? Can you control who gets access? Can you sell that access as a tokenized asset? And can you get the community to stake those assets as a part of that process? If you can do those things, I believe there is a recipe for almost any kind of protocol to be built, right? And then on top of that, I would say there's 3 things that you should look for in terms of accelerators that are likely to bring industries in faster than others. The first is low asset utilization, right? If your assets are not well utilized, and getting incremental utilization out of those assets is really valuable. If those assets are mostly paid for, they're fixed cost based, even more so. And if the asset ownership is dispersed widely, then there's no risk of a cartel forming to say, agree upon and limit capacity in the market. Now, fintech has been wildly successful in this space, and we haven't yet seen any other sort of real industries take off in dynamic ecosystems. But I think we're close. And my personal favorite is the tech stack itself, right? Technology is, computer storage, this kind of stuff. It's always on, right? We can have objective performance. Did you transmit the data? Did you store the data? Did you complete the compute activity, right? There's no human input required. It can all run in a highly automated way, right? And there's lots of excess capacity. Most of our IT infrastructure is truly idle a very, very big chunk of the time. So I think the next big kind of explosive growth ecosystem is going to be in fintech. I also believe we're going to see a large number of what I'll call real world protocols. So we're going to have physical supply chain protocols. I think we're going to have sharing economy protocols, right? There's no reason why ride hailing or couch surfing has to be controlled by one or two companies. And indeed, if you talk to the users, both the people who provide capacity into these businesses and the people who use the businesses, they're unhappy with how things have emerged, primarily because information technology, software, and networks tend to produce industries that are dominated by one or two companies. And once one or two of these companies achieves dominance, they start changing the rules. They start adding fees and changing prices. And this is something that people don't like. And blockchains are great because they give you all of the process sophistication, all of the maturity that you want to have with a digital ecosystem without the ability for a single party to gain a dominant position and impose their views on others. And of course, we'll have industry clusters as well. And all of these will have financial services injected into the operational components of this process. How are we going to scale up these? I think three key challenges that have to be addressed. Number one, real world connectivity, right? It's all very well to have financial services or computing power that are already connected. But if you think about real world systems like cars and assets and warehousing, getting data from those systems is hard, right? My favorite example is think about ordering a burrito online. I think only one time in three do I get the actual burrito that I ordered, right? Now, maybe I have extremely bad burrito karma. That is possible. But the reality is that getting real world connectivity is going to be very important. Pricing. Almost all the pricing that we see in DeFi ecosystems today is based on spot markets. Large enterprises want to negotiate long-term multi-year deals where they can lock in their pricing. And that's very important. And then lastly, dispute resolution. We have mature, very successful ecosystems in the real world. We have a legal structure, we have an arbitration structure. We need ways to bring that in, not necessarily replace all of it. Finally, I want to talk for a moment about cross-chain integration, because everyone's talking about cross-chain integration, but I think we are at risk of mistaking cross-chain integration for, chain A to chain B. That's not going to be how it's going to be, and that's not how it was with the internet, right? Yes, in the beginning of tech history, network A was connected directly to network B. But over time, we first then migrated to private, secure networks, and eventually we just put everything on the internet. I believe we're headed towards the same path. Yes, there will be cross-chain connectivity, but it's mostly going to be to and from Ethereum. Ethereum is becoming the internet of the public blockchain ecosystem. And so when we talk about cross-chain connectivity, what we mean is from a chain to Ethereum to another chain. Everything will go through that ecosystem, just like the internet. So those are my sort of thoughts about the future. Let me take a moment and talk a little bit about EY's place in the sun, right? What is our vision? How are we planning to move forward? And if you ask anybody at EY, if you ask them, what is our vision of the future? They're all going to give you exactly the same answer, which is that we believe blockchains will do for networks of companies, for business ecosystems, what ERP did for the single enterprise. And let me just unpack that for a moment, because I recognize that not everybody's had the joy of working with a ERP implementation or the necessary post-ERP implementation therapy, which is usually required after one of these experiences. And what we mean is this: inside of companies, ERP made it possible for everybody in the company to be on the same page about two things. Number one, we'd all have the same facts. You came to the sales meeting, you didn't say, I have my spreadsheet, you have your spreadsheet. You came to the sales meeting and you said, let's look at the ERP system like SAP or Oracle, and let's all agree that these are our sales and what are we going to do about them. And then secondly, ERP systems impose standardized business processes on organizations. And the consequence of that was that companies could scale up much more substantially because they could start to operate in the same way all around the world. And if If you told a supplier, hey, I'm going to offer you a global deal, you could actually make good on that promise. So that's an incredibly powerful value proposition. And the problem is all of that capability sort of disappears by the wayside when the minute you go to a intercompany process. With blockchain, we can have that intercompany process all over the place with blockchain in consistent data and consistent process. So that's our vision. And we've been working towards that vision for many, many years now. So we got 5 major solution offerings, right? Assurance, consulting, and tax, the classic EY business lines, which are doing extraordinarily well. And then we're doing something really new for a Big Four accounting firm for the last 5 years, which is application development and research, which is amazing. Now, when we think about ecosystems, we talk about public blockchains because that is the only way that you can get to truly global scale. And for us, this has genuinely felt like a bit of a long and painful journey. So we started in 2017 and 2018, we were by ourselves. It was so amazing to sit down with Consensus and Microsoft in 2019 at DevCon in Osaka and realize we had partners who wanted to focus on public as well. And the last 18 months has been amazing because while we're still called out over and over again as kind of being on our own, the reality is the work that we're doing with Microsoft and Consensus to start the baseline protocol is really getting ramped up. And it doesn't feel so lonely in the public blockchain world in the enterprise space anymore. The other kids on the playground don't bully me so much. So we've only got what, a few minutes left, Lindsay? A few minutes left? 5 minutes? They're nodding to me. So I'm going to go a little bit quickly, but I want to talk about a couple of closing points. First of all, we are very, very heavily invested in this industry, right? Nightfall is a premier piece of research that we donated over the last 3 years into the public domain. So we developed zero knowledge proof protocol for private transfers and payments. We've done batching, and then we did whitelist, or excuse me, allow list and block lists. So we enabled initial version of regulatory compliance. We have more stuff coming there. And every single piece of that, we have donated into the public domain. Secondly, Starlight. So if you saw our press release the other day, we just announced this. I'm incredibly excited about this. We're going to talk more about this on Friday in our deep dive on technology, but it is tremendously exciting because it is our prototype effort at a general purpose, zero knowledge proof based business logic compiler for the public Ethereum blockchain. Because if you think about Nightfall, it's all great to have private transfers and payments, but what about the business logic of our agreement? If I think about all the different things that companies do with each other, right? It's I have money, you have stuff, and we're exchanging them subject to the rules of an agreement. And so with Starlight, we're starting to build out the tools that will allow us to compile business logic into mathematical proofs. And we've just taken the wraps of that. That's on github.com/EY blockchain. You'll find something called Starlight. It is our newest contribution into the public domain. Also, we've taken the wraps off this week, a location EIP. So one of the things that's going to be very important around NFTs and other products that we are deploying is sometimes when they talk about things that exist in the real world, we'd like to know where they are. And so one of the things that we are proposing, and again, we've put this into the public domain, is we are proposing the creation of a standardized way for all of us to talk about location data in an NFT, right? And we've just released that. That's in the draft format on GitHub under the EIP proposals. And then finally, all of this stuff and more is what we are rolling into the baseline protocol group, which is managed by Oasis. And again, public domain, open source. There's no surprises in the license agreement because there is no license agreement. No surprises, no gotchas, no special terms and conditions. We want to make adoption of public blockchain technology easy. Now, I'm going to do a little bit of bragging. I don't get to do it often, especially in front of a lot of people. Our business is doing great. We have a compound annual growth rate over the last 3 years of over 90%, right? That is just phenomenal. right? And the numbers are incredible across the board in our business. And that is incredibly exciting. And the payoff at a time when we went through a difficult phase last year and the year before, a little bit, especially in the transition from private to public blockchains, the payoff to see our vision be realized has been tremendous. We continue to clock up what I feel like are an amazing set of clients. So in the supply chain space and business operations, Microsoft, Canadian Blood Services, ANSA, we have a fantastic program with ANSA fighting fake news by notarizing documentation on the blockchain. Carrefour, the Italian post office, big US agri-science company, Peroni, which I'll come back to in a moment, Merck, all of these great companies. A second thing, which we're going to talk about a lot tomorrow, public service. So we have invested heavily in technology that is designed to support using blockchains, especially public blockchains, for public service accountability. And we are working with a provincial government in Australia, some of the world's largest finance development groups, and the city of Toronto to implement our PFM product. And then finally, financial services, who could ignore? We're working with so many companies. Nacha, we're incredibly proud of the work we're doing. World's largest custodian bank, we're working with them. Largest US insurance companies, a huge number of the cryptocurrency wallet and exchange and service providers. And in this group are companies that are just amazing. We don't always get to talk about them, and we're not allowed to talk about our audit clients and name them specifically, but it is awesome when I can talk to people about the fact that we are working with Microsoft on software, right? That's an incredible honor from an amazing partner and real visionary in this ecosystem. It is an incredible honor that our clients are honoring us when they pick us, because this work is challenging and important. And some of them are incredibly tech savvy. And the fact that they believe that we have some of these skills is amazing. Although I can't name our blockchain assurance clients, that business is up at a truly phenomenal pace. We've got almost a third of the top 20 crypto exchanges, half of the top custodians, right? And we're doing all kinds of amazing work for them. Financial statement audit, smart contract testing. This is one I'm so proud of. We're going to have a demo of this later, right? In a world where we're all going to be using smart contracts, to have the ability to test and verify and validate a smart contract and not have to be a software developer is going to be essential. Audit readiness, IPO readiness, forensic analysis, unfortunately for some, and attestation and SOC reporting. And if you don't know what a SOC report is, this is something that's going to be incredibly important in the future, and I encourage you to learn more about it. We think this business rate is just going to continue to explode. We have over 6,000 clients in banking and capital markets between audit and non-audit sides of EY. And if we go by the sort of penetration of investment banking and assurance services into traditional banking, about half of all banks provide other types of services beyond basic banking. And I think we'll see the same percentage in blockchain. So it's going to be a huge number of new companies, right? And it's not just offering crypto, right? We believe the portfolio of growth that we're going to see over the next few years is going to be very extensive. For sure, Bitcoin and digital assets in portfolios, already almost a mature business. Automated DeFi, right? Consumers are all in, they're very sophisticated adopters, but enterprises are just getting started in this space, right? We don't even see kind of the large scale adoption happening in that space for another couple of years. Stable coins in the enterprise and the treasury, right? We're just seeing a ramp up in that. Business contracting and embedded payments, integrated tax services, all of those are in the pioneering stage when it comes to enterprises, even though consumers are far down the road. So we see years and years and years of very substantial enterprise and government growth in this blockchain ecosystem. I want to spotlight just a couple of our clients that I'm very proud of and really appreciative of. The first is Peroni. So we just switched on Peroni very recently. We've been doing product traceability for many years, but Peroni are the first to migrate to blockchain.ey.com, which is our blockchain as a service environment. And it's a blockchain as a service environment that is singularly focused on connectivity for industrial and financial applications to the public Ethereum mainnet for enterprises. So we have direct connection to Peroni's ERP system, and we are producing an NFT every time they produce a new batch of beer. So very proud of that progress that we're making. And then secondly, I want to spotlight our continued work with Microsoft. This ecosystem around the Xbox that we are building with Microsoft is amazing, and it has tremendous momentum, right? The numbers are ramping up enormously. I don't have an update for you that I'm allowed to share, but it's I think 20 or 30 times larger than it was last year. And still, performance metrics have not changed. 99% reduction in cycle time, which I'm told is pretty good, right? 45 days down to 4 minutes, 40% cost reduction, and a huge improvement in kind of transparency and trust across the value chain. Now, I talked before about all the big investments that we're making in technology. They all come together at blockchain.ey.com. This is our blockchain as a service environment, right? It's where we have this shared digital infrastructure. And in that environment, we've got two major kind of product platforms. The first is EY OpsChain, which is all about making our world transactable and business oriented. And into that environment, we've got our procurement system, our traceability, global trade origin, and public finance management. And then secondly, we have blockchain analyzer. So if OpsChain is about doing things on the public Ethereum blockchain and some other blockchains as well, analyzer is about understanding what's happening in your business on the blockchain. And that includes tax calculator. It includes our Bitcoin visualizer, which is completely free for the public to use, and I encourage you to test it out. Our smart contract testing and review service, as well as our audit analytics service, which is used by our audit teams. Now, OpsChain is all about making business at the network level transactable. So if we think about OpsChain and we think about, okay, I've got a digital asset token, right? I want to represent both that physical asset and the legal ownership, and then I want to deliver services against it. Now, so far, we've mostly been doing that with financial services, but one of our key goals is to work with our industrial clients to tokenize and make transactable the inputs and outputs of their business process. So it's not just that we have a smart contract, it's the outputs of that, purchase orders, products, invoices, receivables, those themselves will also be tokens that we can put into DeFi services, and we can get working capital and transaction services. Ultimately, I believe we can really model and execute any intercompany business process, right? If you think about business processes between companies, they basically boil down to this. I got money, you got stuff, and we're going to exchange those under the terms and conditions of some kind of a business agreement. Well, if we represent the money or stuff as tokens, and we represent the agreement as a smart contract, that's all we need to model and execute that. And if we throw in analytics, we can understand what's happened as well. So we are, in my view, really just getting started. And as we mature over the next few months and years, we will go from having just 2 or 3 kind of core products to a general ability to help companies simply and easily plug their enterprise systems into the public blockchains and then do business on them with all of their partners. Now, I didn't talk about this before, but I want to take a moment and talk about where we are investing. And this is a big milestone today, or really more accurately, yesterday. We had the public confirmation by EY of a $100 million commitment over the next few years to invest in our blockchain business. And this is special for a couple of reasons. First of all, $100 million is a good Series B, which I'm very proud of. But also, EY is a partnership, right? And so when we talk about investing $100 million, that's me investing my money. That's all my fellow partners around the world that are investing their own money in this business. And so to my fellow EY partners who are watching, I would just like to say thank you. Thank you very much for the vote of confidence that you've given, not just yesterday, but the last 5 years, right? You have let us build this business. You have allowed us to hire people. You've allowed us to do things that we've never been able to do before, like hire nuclear physicists and researchers and do millions of dollars of research and then put it into the public domain. And you've trusted us that this is the right thing to do. So I'm very proud of that. I've got a picture here. We are all moving with the rest of EY in the New Yorker area, at least to One Manhattan West, starting in the fall. And so I'm excited about that investment. We are a truly global entity now. We've got our major offices in San Francisco, Seattle, New York, London, Paris, Rome, Zurich, Tel Aviv, Trivandrum in India, Delhi, Seoul, Shanghai, Singapore, and Tokyo. So we are a truly global operation. Okay, almost done. Just remember, this is a virtual conference. You want to take the entire conference with you to the bathroom, just hit mute and take a break. We're going to have a couple minutes of break after I'm done, but we're not quite done. So I want to talk about a last thing, which is having a sense of urgency. I operate all the time with an incredible sense of urgency. Like I feel like every minute of the day, the clock is ticking, because I believe that the really important battles from market share and market leadership are decided long before mass adoption, right? I mentioned before, only 10% of American consumers have crypto assets. It's probably like 2% of the Fortune 1000 companies in America that have significant crypto assets on their balance sheets. And it's probably almost 0% who are making use of DeFi. But I believe the time when we decide who leads these markets and how they mature is right now. Every technology market goes through a long adoption phase, right? There's this early surge of excitement, and then you end up for a few years in what everyone calls the trough of disillusionment. That's when we realize that the amazing promises that were made in the ICOs or the headlines or whatever else aren't easily executed, right? That you can't just put an enterprise contract on the blockchain unless you have privacy. And while privacy turns out to be kind of difficult in a properly decentralized environment, right? And so getting all of those things worked out is hard, it's difficult, and lots of people give up. And when you get it right, as we have with DeFi, and it starts to explode, people start to take notice. But what I believe and what I've seen over and over again in other industries, whether it's in cloud computing or network equipment or personal computer operating systems or mobile operating systems, is that the winners in these marketplaces don't emerge after mass adoption takes off. They emerge at that inflection point where they get it right and they're there at the beginning. And it is remarkably hard. It is extraordinarily hard to dislodge those winners. Think about the winners in networking. Think about the winners in cloud computing. Have they changed over the last 10 years? No, they haven't. And I believe right now, the leadership positions in blockchain are being chosen, even though industry acceptance is somewhere between 2% in the industrial space to 10% on the consumer side. And yes, there's another 15, 20 years of rapid growth ahead of us, but the leadership positions are happening now. And the other big danger is that being disrupted is almost always painless. We think of disruption as this kind of dramatic process where you wake up one morning and all of your business has disappeared, right? And that's how we talk about the famous cases, right? One day we just stopped using vinyl records until they became very cool again, briefly, right? But in fact, most of the time, what happens with disruption is it happens almost invisibly, because it's not that your existing business disappears, it's that all the growth goes somewhere else. Radio didn't die, we still have radio. It's just that TV is a much, much bigger business, right? Game consoles are still a great business, but mobile gaming are enormous, right? Thousands of mainframes are still sold every year. But whereas one time when my mother was a mainframe software developer, those mainframe companies, they were 100% of global computing output. Today, you'd have a hard time figuring out if they were even 1%, right? So disruption doesn't mean bankruptcy. It means profitable, but probably irrelevant. And so if you want to avoid disruption, you have to dive in and pursue growth, because otherwise all of that stuff will pass you by. So I hope I can convey to you both my enthusiasm for the future, as well as the incredible sense of urgency that I have around growing and investing in this market today. Wow. All right. We are going to have a very short break, and we're going to have brilliant color commentary by our guest stars during the break. And then we will come back. My colleague Chen Zhuo he is a US blockchain leader, which I managed to recruit from EY Israel. He is going to give us an amazing panel discussion on emerging digital asset ecosystems. So thank you all so much. I'm going to check in the AMA forums on Reddit to read about all the nasty comments about my t-shirts, right? And also to check in on any questions you've got. And remember, at the end of the day, I'm having a fireside chat with Jeremy Allaire. So if you got questions, go in there. It's ETH Finance on Reddit. There's a link, it's stickied to the top of the forum. If you've got questions there, please do post them. I will look at them and try to answer them. With that, thank you so much, and thanks for joining us today.
Hey, how's it going, everybody? JT here from ETH Finance, joined with my good friend Super Fizz from the ETH Staker moderator team. Thanks for tuning in to the EY Summit for 2021. Super excited to be a part of it as we were last year during the pandemic, taking the EY Summit virtual. Made a whole lot of lemonade out of lemons from last year. So Super Fizz, I'll pivot to you first. What were some of the big takeaways that you saw Paul talk about?
My global takeaway was really the goal alignment. Just hearing Paul talk about so many of the things that we talk about every day in ETH Finance and ETH Staker, just the utilization of Ethereum as a smart contract platform and not just a static investment. And so I think that is one of the fundamental things that industry misses. When you hear these big investment houses, when they're accumulating coins, they're not thinking about the future of smart contract use. They think they're accumulating static coins. And to hear Paul with this global vision of how smart contracts are going to change everything, it heartens me to recognize or to realize that someone gets it. And so I'm just delighted with Paul's vision.
Yeah, definitely. And one of the things was this idea that, we live in this DeFi world where all of the subsequent tokens that come out of those smart contracts are really kind of composable with each other in a basket of assets. I mean, it's starting to get to the point in DeFi that's moving so quickly that multiple assets are like coming together and can be used to stake or farm. And then you have like index funds of index funds. It's just like, this has never been made before. And truly the mom and pop is on the equal playing field as a lot of the enterprise people. That's kind of like the promise, I think, of Ethereum and smart contracts is it kind of brings a level playing field in a very trustless but provable way for the world to engage in. And it's super exciting to me.
Yeah, it's neat that, we talked about 10% of people holding cryptocurrency. And so while you have this 1% of people in industry who are moving at the speed of light, you also have 90% who are completely oblivious to anything happening. And so, I don't love the idea of evangelizing, but there needs to be some way for people to realize that this is happening because it's going to pass them by quickly. Things move more quickly every day. And we need those 90% of people to wake up and see what's happening.
Absolutely. Well, with that, we're going to pivot right back to the EY team. Thanks again for tuning in on ETH Finance, our Ethereum, and ETH Staker, and hope you got your POAPs today. Take it away.
Hello, everybody. Good morning, good afternoon, good evening, depending on where you are in the world. I'm joining you live, first time in way over a year from an EY office, so fairly excited about that. As we slowly go back to working not from home, or not entirely from home. Following Paul's note, and no, I am not going to change my t-shirts, not going to happen. I'm going to stay with the boring black. I was thinking how I'm going to present the next two panels and in a way that makes sense and explain why we put them one next to each other. The way I look at this is that in today's world, there's two separate rails in which we interact and do business. One is the financial rails in which we pay. The other is the supply chain rails in which we exchange goods and services. And one of the great promises of blockchain is to converge the two. And what we are, or I would like to achieve in the next two sessions is to show you the progress that each of the separate rails is making in order to converge into one rail that manages the exchange of value. So another point there is, if I look at the tipping point of blockchain technology, that if you ask me, is behind us and can be pinpointed to PayPal offering crypto access to 360 million of its users in December 2020, I can tell you my calendar definitely doesn't look the same before and after this date. They often ask me which industry is going to be disrupted after the financial services is disrupted, because this is already a given. My answer to that question is all of them, once these two rails are converged. And what we're going to do in the next session is discuss the progress that the financial payment rail is making towards this technology adoption. We've collected 4 representatives that represent this change. The first 3, Fireblocks First and Banco, represent the different parts of the new financial infrastructure stack, so custody, payment, and DeFi, while the last participant, BNY, represents a large financial organization who's going to be using these services and this new financial infrastructure. I've looked at the presentations. I think that they really bring a message of change with them. And before I hand it over to Michael from Fireblocks, I just want to, I wasn't sure I'm going to mention it, but definitely I want to reach out to our friends and colleagues out in Israel. You're going through difficult times. We really hope that the violence ends soon and you are safe and well. With that, Michael, over to you.
Thanks, Chen, and happy to be here. So thanks for the entire EY team of inviting us for this session, and also for my other colleagues here on the panel. So my name is Michael Shalav. I'm the CEO and co-founder of Fireblocks, and I wanted to basically share with you a short presentation about what we do. So let me just figure out how do I share my screen here. Okay, hopefully. Yeah, hopefully everybody can see the deck. So what we do here at Fireblocks, we provide an infrastructure for the financial market, or for basically for financial institutions to really engage with digital assets and build an infrastructure to enter the space. That eventually means three main things. The first one is custody technology or wallet technology. So we provide an institutional grade, highly secure technology for people to engage with custody and be able to store those assets in their infrastructure. The second thing is that we provide settlement rails, which is called the Fireblocks network, and we'll dive into that in a second. And the third thing that we do, we help organizations to tokenize and issue assets in a secure manner, which I believe personally that this is the future. And that basically ties into our ability to support DeFi and some of the most advanced use cases in the space. So quick overview about Fireblocks. We've raised over the last, we started the company about 3 years ago. We raised about $180 million from a large set of investors, including, by the way, Bonnie, who is a great partner for us and on this panel. So thanks, Mike. And within the last 3 years, but most particularly the last 2 years since we went live with the platform, we currently serving over 325 organizations that include the biggest banks in the world, the most leading fintech companies such as Revolut and eToro, all the liquidity providers in the cryptocurrency space such as B2C2, Cumberland, GMO, Galaxy, and so on, and a lot of the other providers such as custodians, lending providers, hedge funds, and so on. So we're really able to cater our offering across the board. And the most interesting thing is that with the explosion of the ecosystem, we really started to see a lot of people not only entering this space and setting up their infrastructure, but really the activity is picking up. So the main KPI that we are actually tracking is we both track the AUM that is stored in the wallets that we provide, and right now it's in the tens of billions of dollars. But the most impressive is actually to see the activity on chain across our settlement network, the Fireblocks network, and basically what people are actually doing with those assets. So you can see here how the volumes from our infrastructure are being conducted through our clients. And over the last 30 days, we've seen about $125 billion of digital assets being transferred. And through the course of our existence, we've transferred north to $1 trillion, $500 billion of assets. Now, the most interesting thing is actually to see the breakdown. And the breakdown, I don't have the chart here, but we see about 40% of the volume being Bitcoin, about 30% being Ethereum, but then the rest is actually already tokenized assets. A huge amount of what we're doing is already stable coins. So basically a payment use case where stable coins are being used to settle transactions. Right now, most of the assets that are being settled on the other side of the DVP are cryptocurrencies such as Bitcoin, Ethereum, but we're starting to see more and more of that being used for NFTs and other use cases that really tie into some of the things that Paul explained in the previous session. So just to maybe dive a bit deeper into what exactly we do and what we provide. Our infrastructure has, I would say, two main components. We have the network and we have the vault. I'll start from the second bullet over here. The vault is basically the custody technology, or it's the wallet management solution that we can install in our customer environment, either as a software as a service or a platform as a service where the key management is installed on-prem. And that's basically sets up the wallets in which you can basically custody your own assets, or you can custody the assets of your clients. We use a fairly advanced technology that Fireblocks is in the forefront of developing it, called multi-party computation, or MPC. That's basically the most secure way of doing custody those days, because what happens is that you basically remove the single point of failure or the single point of compromise around the private key. And I'm sure that most of you guys on this call heard that the private key, the concerns around the private key being hacked, and the concerns about all the hacks that we've heard over the last couple of years, that those wallets are being compromised. MPC basically solves this issue by removing the single point of failure and distributing it across multiple clouds, across multiple devices, to make it way more difficult for hackers to compromise the system. The other interesting thing is that our technology is very suitable not only for cold storage, where assets are sitting sort of dormant, but it's actually a high SLA technology, which really supports the most advanced use cases around transaction banking, payments, DeFi, and so on, and really supports you not only to store the assets, but really put them to work, right? Whether it's using lending and other use cases that you're familiar with, or things like issuance, where you can basically mint and distribute tokens. The other thing that we do, we have the Fireblocks network. So the Fireblocks network really allows our clients to settle with all the different counterparties. We have the biggest network today. We support all the top 30 exchanges. We support all the leading market makers that you can work with for liquidity, lending, and other use cases, including payments. And what we've done really well is that we've integrated all the compliance functionality into that network. So all the transactions that are going through have passed sort of the KYC controls that you need, and also there is an integrated transaction monitoring that for every transaction that is being incoming or outgoing from your wallets, that's being screened through your compliance configuration. And again, EY is great in terms of being able to guide you with the right configuration. And then it's being, if it basically is non-compliant, the transaction will break and the assets will freeze. And last but not least, as was mentioned previously, the sort of security and assurance of this infrastructure, the infrastructure that is being built, is critical. So our infrastructure receives SOC 2 Type 2. Actually, our SOC 2 Type 2 is auditors are Ernst & Young, and we doing this assessment on an annual basis. And and we also have different modes of insurance that can be deployed on our infrastructure, both the ability to secure assets in storage, but also the ability to secure assets in motion. So to basically conclude, I think my introduction of Fireblocks, what we are really able to do and what we are seeing happening in the market is that this proliferation of capabilities for financial institutions to really support the custody, the settlement, and the more advanced use cases. And we've built the most, say, battle-tested and advanced infrastructure to help people to come into the market and basically unleash the power and provide those services to their clients. And I'll stop here.
So real quick transition to Goldie. Goldie, let's talk about what's happening in the payments world. Over to you, please.
Hey, thanks. So pleasure to be here. Thank you, Chen, and everyone for inviting me from the EY team. So I'm gonna piggyback, I think, most of all on what Paul said, and he said we're gonna talk a lot about stable coins, and this is why I'm here. I'm the co-founder and CEO of First, and we're a company that we consider ourselves the next generation payment processor to help PSPs, acquirers, gateway to process stable coins. Now, I know you were hoping that we would talk, more about Bitcoin, and its rise, or maybe, its demise, but we're not allowed to do that. I asked Chen for the permission to talk about more interesting coins, maybe, but he said, that my fate would be not the best. So instead, we're going to talk about stable coins and the battle that I personally see in what's happening right now in the stable coin world. I'm going to try sharing my screen. There we go. Okay, so hopefully you can see my slides right now. And sorry, there we go. So like I said, what we do at First is we've created this platform for the past few years that allows stablecoins and CBDCs to be accepted by acquirers, PSPs, gateway, even large merchants. And I guess that in the last probably several years, no one really cared. But in the last year and a half, and Chen and Chen, I can pronounce Chen, and Chen mentioned this, there's a huge uptick in this world. And what we do basically is we allow those users who go to merchants to have a pay with, let's say, USDC or pay with DM or pay with Celo button. And then that transaction is being redirected to us. We take care of all the KYC, the custodial part of it, which we, by the way, we use Fireblocks for, the off-chain and on-chain management and the liquidation back to the merchant so he could receive fiat funds eventually if he wants to. But again, why does this matter? Because there is a huge battle on stablecoins. And you might not know, but you've probably heard that money's changing. Last we've heard that Facebook's DM project is about to launch any minute. China's CBDC is about to launch probably full scale in the next Winter Olympics in 2022. And you might have seen, by the way, that an hour ago or 2 hours ago, they've said that Bitcoin is no longer allowed by merchants. So they're trying to close all of those crypto gaps. And again, the OCC, which Paul talked about, and JP Morgan, they're all having a battle. And that battle is between the large tech that you already know, Amazon, Google, Facebook, Apple, the card, let's say, companies, the card networks like Visa, MasterCard, Amex, and there's a lot of other processors in this battle for finance that's happening right now. And obviously, you can't have a really good battle without someone in the corner that's just shouting weird stuff. But again, going back to this battle, I want to tell you how I view the battleground. And the battleground, from the way I see it, sorry, there we go back. The battleground is in 3 different places. So on the top of this triangle, we have governments and CBDCs. Now, unfortunately, that's moving slowly. And again, those are governments, it's fine. They need people to hold their hand. Chen, I think you guys and EY can probably do an amazing service if you take those governments forward. But we've been hearing about the Bank of England moving forward. We've been hearing about other governments that are now testing CBDCs. That's great. On the bottom right side of the triangle, we have businesses. And I want to remind you, there's $4.9 trillion out there that are out for grabs between the different in e-commerce right now. That today people are paying with cards, people are paying with cash, people are paying either with e-wallets, etc. Now, those $4.9 trillion, those rails that people are using today are supposed to go full digital. So this is going to be a huge battleground on the businesses B2B and in the friction point between businesses and consumers, which is the left side of the triangle, where you have people with P2P transactions, you have remittance corridors, there are ups for grabs. This is the new battleground between the different companies. And if we start talking about those companies, then we have Visa, obviously. Visa tried, if you missed the last episodes of the stablecoin battle, Visa tried to acquire Plaid to make sure that it's not losing grounds in its rails of how money is being transferred. Plaid, if you are not aware, is a company that allows people to transfer money through their bank account rails. They were not able to acquire Plaid, and eventually they decided to drop this off, but they have not totally forgotten about the fact that credit cards are now slowly being used less and less in the world. 72% of all transactions in the Netherlands are done with bank-to-bank transfers. So Visa went ahead and invested in Anchorage, and Visa is full on crypto. And Visa also went in and started a partnership with Circle, a company that, again, is worth mentioning, is doing amazing things in the stablecoin world, and is targeting specifically businesses B2B with its USDC stablecoin. Now, worth mentioning about USDC, first of all, they have the best iconography out there. They took the US dollar and they put some amazing colors around it, but also they have $16.5 billion in circulation, right? And that is, I would say, probably the second largest stablecoin right now. It's still used mainly for trading, but they're targeting the businesses. Facebook is, not staying quiet and has launched Diem 2 years ago. Everyone is hoping for this to launch already. Novi is Facebook's wallet, and Facebook is trying to, their angle is, let's go to the consumers first. Let's go to remittance. If you look at Diem's website, they were talking a lot about remittance corridors and helping people transfer money around the world with lower fees, etc. But obviously, you are all not fooled by the fact that Facebook's wants to be your wallet. They want you to make payments, not only to transactions to people overseas, but also payments in their stores, payments in other people's stores. And again, basically this battle is for your wallet. And I'll tell you why when we end this battleground slide. By the way, I'm ignoring the chat. So if you're trying to signal that I only have 50 seconds, I'm probably not seeing this. So I'll try to do this as fast as possible. So other people in this battle is MasterCard, that is actually doing something great in CBDCs in the Bahamas. And I think the most interesting thing is they invested in Consensus. That's a huge step for them. And also they've posted a blog saying, we're here to help you move your money on whatever rail you want, which is interesting. You would not hear that statement a year ago. Moving forward super quickly, Diem, by the way, is trying to also talk to the governments. And you've seen that. Diem is supposed to be a CBDC infrastructure. And also, obviously, like I said, they're also going for the businesses. PayPal, latest announcements are amazing. They help people now buy and store crypto. Venmo allows you to make transactions. But really, the big play that's going to come, and I think we'll see it, is a stable coin eventually. And maybe last but not least, Celo, it's a stable coin that we have not heard a lot about. We probably will hear more in the future. Deutsche Telekom backing Celo. So this is the battleground on your wallet, because 10 years from now, hopefully 5 years from now, if Chen is good at his job, 5 years from now, every government in the world will issue a digital currency, and you will have a new wallet. You will have a new bank account. Which one of these companies will be the manufacturer, the creator of your wallet? Visa, MasterCard, Facebook, Celo, PayPal? I have no idea yet, but I'm sure that Chen will let me know just a bit before. So thanks again, and I'm from First, and we'll see you in the discussion.
Thank you, Goldie, for an amazing discussion, and no pressure, right? No pressure. Let's talk about the DeFi world, and let's go to Galia. Galia, floor is all yours.
Hi, everyone. Can you hear me okay? And I'm sharing my screen. Great. So I'm Galia Ben-Artzi, co-founder of Bancor Protocol. And as Chen mentioned in his intro, we're kind of flowing up the stack here, right? So from Fireblocks really custodying and holding the assets to first looking at stable coins that are running on those rails. Bancor is a liquidity infrastructure that's letting stablecoins and all kinds of other digital assets move freely throughout the various ecosystems. And my talk today really zooms out much bigger than Bancor to the future of money and what it means that users can generate currencies. So I want to actually start with, here we go, kind of a big picture on evolution, computing, and money. So what you see here on the slide is sort of the trifecta of the components of the stack as we see them. So if we look at the human brain, what we're able to do with our brain is basically three things: process information, communicate information, and store information. If we look at the computers that we created, they're able to do these similar functions. So the mainframe computers that we talked about today process information, the networks between computers communicate that information, and the databases within computers store that information. Interestingly, you can look at money as having sort of these parallel types of functions. A unit of account allows us to process the relative value between things. The means of exchange allows us to move that value between nodes in the network, and the store of value allows us essentially to store it much like a database or memory stores the information about how much value is sitting where. And if we look just at the computer part of the stack, each component within the computing stack has undergone a shift in the last 20, 30 years from private walled garden technology infrastructure to public open standards. So in the mainframe computer, we of course today have IBM compatible PCs. This allows for many, many companies to participate in the PC ecosystem and add value, create value with a standard that allows everyone to interoperate. In networks, of course, we know this public network infrastructure as the internet. This allows, again, many companies to create and add value to the internet ecosystem because this standard for interoperability. And now what we're seeing and what kind of brings us all here today and to EY's big push into this space, among others, is the transition of database technology from private walled garden databases, which is essentially every company out there you know, and every source of value out there you know, whether it's government databases or corporate databases, moving to public database infrastructure that we call blockchain. And I'll just remind you where money fits into the stack. We see that money is going through a similar disaggregation, if you will, from private walled garden protocols or monopolies, if you will. As you see in this slide, we have kind of one currency per nation standard today to a much more open interoperable standard, which is what we see in the digital asset ecosystem. Of course, we don't have only national currencies today. We also have corporate currencies. These used to look like airline miles. Today, maybe they look like Facebook's DM. We have coupons and vouchers and other types of community credits. And then today, of course, in DeFi, what we see, or in blockchain more broadly, is the tokenization of everything, what I've called here IXOs. The X stands for anything, and we will see increasingly more innovation around how these different tokens get generated, get distributed, and then of course get used in their various applications. Why do we need so many tokens? Each token essentially represents a value ecosystem of its own. And a token is the generic name for the container that's holding value. And that's allowing that value to move around. The purpose of this slide is to say that everywhere that we have reduced barriers to entry, reduced technical barriers to entry, we've seen emerge what's called in internet culture as a long tail, which means millions of users approach these tools and technologies. The question, why do we need so many tokens, is similar to the question, why do we need so many videos on YouTube, or why do we need so many blogs? We need them because they essentially represent diverse innovation, unique value creation, and various communities finding product market fit, if you will, for the different assets that they're creating. And now that we have reduced barriers to entry, if I remind you of the slide with the nations, from only a nation or a government can create a currency to anyone can create a currency, we're witnessing this long tail phenomenon, what I call user-generated currencies. What's really interesting about a long tail phenomenon, and we see this in YouTube and Reddit and the other long tail platforms that we all know of, is that the long tail actually represents 2 to 3 orders of magnitude more value than the head or the hit. So if we think of YouTube, the 100 million videos that none of us have ever seen combined actually represent more viewership, more traction, more traffic, more ads, more revenue, whatever the call to action may be, than the top 10 videos that we have all seen, all of them. And so when we take this analogy to the world of money, what we can expect is that in the long tail of millions of currencies, we're today at tens of thousands of currencies, maybe growing from there, but in the future we can expect millions and hundreds of millions of diverse currencies. We'll actually expect to see a majority of the value within our economies being created in the long tail of these currencies rather than the hits. And the hits could mean the US dollar or the euro, and the hits in the case of cryptocurrency can mean Bitcoin and Ethereum. But the long tail phenomenon is the same. I'll bring you, again, I can't see the chat if anyone is chatting to me, so I'll try to speed through. Back to, let's see here, a little known fact about Bancor. In 1944, at the Bretton Woods Monetary Conference, we decided collectively as a world at that time to use the US dollar as our global reserve currency. Why? Because we needed one reference currency for everything to compare to in order to have exchange rates between the currencies of the world. And a little known fact is that another proposal was made there actually by the Brits, and it was called Bancor. And the Bancor Protocol of today is named in honor of this proposal, which essentially said, let's suggest a supranational currency, an additional currency that isn't the currency of one nation in order to do international settlements between us, because using a domestic currency as also a global currency creates some imbalances in the system, unique benefits to the holder of that currency or the issuer of that currency. 75 years later, for better or worse, we see some of the benefits and some of the drawbacks of that system. And the Bancor Protocol was really created in the image of the path not taken, which was to create a more free and fair playing field for the interoperability of currencies in the crypto landscape and hopefully moving forward. I'll blaze through kind of what the Bancor Protocol innovation brought to the table, which was moving from a peer-to-peer transaction system. I have triangles, you have squares, and we want the opposite. And we know many of the friendly folks in this ecosystem that help us do those trades, help us find those matches, to a peer-to-machine infrastructure, which has continuous liquidity, it's frictionless, it's transparent, and an infinite number of pairs between types of assets can be created in this mechanic. I won't go into the math here, but just to give anyone who's not familiar with the concept of liquidity pools, which Bancor ushered in, you might be familiar with other protocols who use this mechanic like Uniswap and others. Essentially, the smart contract is governed by code or formula, which tells it these two piles, and you can have more, but in this use case, these two piles of tokens are equal in value. And so the moment that tokens are moved from one pile to the other, meaning converted from A to B or from B to A, because the ratio of those pools changes, the price between the tokens needs to change automatically in order to rebalance those piles. Again, the smart contract only knows one thing, that the value in pile of token A is equal to the value of this pile of tokens B. And so as swaps happen, prices adjust automatically. You can think of this kind of like a vending machine, where the price of the vending machine is constantly updating based on the inventory that it has. And as demand for a certain can of Coke or a specific token goes up, so does its price according to this mechanic. It's very interesting when you create an architecture like this, because essentially any token can now be swapped for any token, and you don't need the traditional architecture of trading pairs or the traditional order book that we're used to using. This essentially means an exponential rise in the number of pairs that we can have. A very esoteric currency from a small country can be paired with an STO or an asset from another country. You don't need order books full of liquidity in order to manage the interoperability of the hundreds of millions of currencies and tokens that we expect. A few quick stats on Bancor. Today we're looking at $2 billion worth of total value locked in the network. We do about $200 million worth of volume between currencies per day. And I want to leave you with this another piece of little known info that I think is interesting. We've all heard of Metcalfe's law. Essentially, this is what we learned to be familiar with in the internet, which said that the throughput of a network, I'll start with Sarnoff, which came before Metcalfe. The throughput of a network is equal to the number of nodes in the network. So this is for one-to-many types of networks like broadcast, when you watch TV or when you listen to the radio. The number of people affected by that message or impacted by it are as many as are listening, right? That's N. Metcalfe's law said when you have a technology like the internet that lets us have peer-to-peer transactions or peer-to-peer interactions, we're essentially looking at N squared type of throughput, meaning that anyone can interact with anyone. So there's an N squared potential for throughput in the network. Reed's law actually says that it takes it one step further, that when you look at a network which is made of networks, so in the currency model, that means, every token is not just one person. Every token is an ecosystem of stakeholders using that token. And in an interoperability network, you have ecosystems and ecosystems and ecosystems all interoperable. What you have there is actually not n squared, but it's 2 to the n in terms of the throughput of that network, meaning that the number of possible interactions between people within each network and people across networks is exponential. And so what we learn from this is that when we open up these technologies to allow for user-generated currencies, for the proliferation of a multi-token ecosystem, what we can expect is orders of magnitude more value creation, more innovation, and more throughput in the economy. Hopefully something that will allow us to solve sustainable development goals, reach all of our various economic ambitions by essentially creating more liquidity through more currencies, which represent more networks of stakeholder economic collaboration. I'll leave you with that. Thanks so much, and I'll stop the screen share here.
Galia, thank you so much. I found your last comment highly relevant also to Paul's compound innovation slide and discussion. This is what the future is amazing in that regard. Last presentation I'm really excited about, with all due respect to everybody building the technology, the guy responsible for bridging that to the existing infrastructure and to the existing financial rails. Mike Demise, over to you. Truly excited. I know what you're going to show. Truly excited to hear it. Over to you, please.
Thanks, Chen, and thanks everyone. Very happy to be here. So Mike Dempsey, I head up the Digital Asset Unit and Advanced Solutions at BNY Mellon, and fascinating discussion. So today, I'll start with the context, just pulling together, I think, what we talked about. So what's been talked about so far. Hopefully, you can see my screen well, and share with you what we're hearing from our clients and what we're doing to address it as well. So I think Paul really has summarized it well. We've been excuse me. If you look at this past year, digital assets going mainstream could be the headline. And this is an array of assets. I mean, that has been talked about, from crypto to stablecoin to different types of tokens as well. And it is safe to say, I think, the emergence of these assets has been led by crypto. And by far the most established, largest digital asset by market cap. And the common investment thesis that you hear, I think, that Bitcoin as a digital gold or a digital store of value has been getting traction, right? So that's taking hold. You're hearing more and more about Ether becoming an infrastructure play, and given the Ethereum used as a foundation of a number of innovative solutions and apps, including DeFi space. I mean, that Paul mentioned earlier. An important theme that's been written about a lot as well is the expansion of retail to institutions, and that's been accelerating. And given where we stand in the ecosystem as a key service provider for institutions across several sectors, we've seen that firsthand in our client base as well. The regulatory clarity is helping, whether that is banks being able to provide custody, or the use of stable coins and banking purposes for settlement. It's not all settled. There's still a lot more work that needs to be done, but at least the direction of travel is becoming clearer and clearer. And another piece that I think would like to call out is you can see the ecosystem maturing, right? You can see large institutions like us entering the space, to address the immense need that is out there. You're seeing insurance becoming increasingly available, and starting to see derivatives and other types of related products actually come as well. So, all these are important themes, and we're going to talk about in terms of the implication of it. The stablecoin aspect as well, in terms of 2020 being a year that stablecoin really taken it to the next level. Growing by 300% plus, over $1 trillion worth of transactions in a year has been remarkable. And in part has been trying to that's been facilitating crypto transactions. But when you put it all together, the growth of cryptocurrencies and digital cash seems to be adding a sense of urgency as well, right? Like on central banks having to figure out the future of digital cash as well. So all this is paving the way for other assets, like going digital in a tokenized form. So that's how we see it as part of a larger trend, not necessarily just limited to a particular space. And of course, just around the horizon is DeFi, right? Like that's rapidly growing, and you can argue it is relatively small, the size of it, but it's a space that is definitely worth paying attention to. So with that, what are we hearing from clients? As I mentioned, the institutional interest ramping up has been an open secret. The interest has been primarily on the most liquid or most common assets like Bitcoin and Ether, but we see that rapidly expanding as well. And clients are looking for service providers, figuring out what the regulatory questions that they have as well. But if I share with you that some of the common themes, trust is really the one thing that we hear over and over again. Security is top of mind. So cyber, or looking at all the different threat surfaces. So that actually informs clients and picking a partner that has the experience and track record of risk management, and picking again a partner that actually regulators trust, right? Has the resources, infrastructure, and risk and compliance practices and rigor that actually that they would feel comfortable with. Clients are also looking for protection, whether that is insurance or again having a well-capitalized service provider. That's an important consideration as well. Another theme is institutional service. So there's given the space is emerging or transitioning from from the retail space, the institutional service needs are not as mature. So whether that is reporting, risk and compliance, tax requirements, all these things, our clients are looking for. And they're looking for integrated service as well, because they cannot afford, to have these things fragmented across the board. And they're looking to do more with their digital assets, the same way retail investors are. Institutional clients also are looking after that. So what does that all mean? So what actions are we taking? And I would summarize it in 3 parts. I think the first part is really obvious. It is extending the core services that we do. In our case, in BNY Mellon, it can be fund administration, accounting, banking services, to cover digital assets, right? Clients getting into digital asset doesn't necessarily mean they're looking for a new service provider. They want that those services to be covered directly. Second, we really need to delivering on a multi-asset infrastructure that offers, Chen talked about to bridging these 2 worlds. So integrating these services, whether starting with custody, is important, and there needs to be secure, resilient, built to support the institutional volume that you would expect. So all those things are things that we're actively working on, and planning to go live by year end. And we're not doing this alone. We're looking for best-in-class solutions. With Fireblocks and Michael and team being one example. And that's we think that is actually the right recipe to tackle this challenge. And of course extending these services. The last part I would say is whether it is to support new digital asset services, lending, collateral, or being able to actually support clients in tokenizing different types of assets new capabilities that would allow, bring them over to the digital rail so they can benefit from, all these, key characteristics. So, just to close it out, I mean, I think, it's a space that we see a broad range of possibilities, but more importantly, it's not something in the future. It's actually happening right now. And, we're really committed to the space, and we're charging ahead with conviction, and happy to be in the middle of it.
Perfect. So can we all go back, please, on screen, and Wasim, I'll ask you to show all four of us, hopefully. We only have 5 minutes, so lightning round. One question I would ask, and I would start, with the same place where I started this conversation. These financial rails are great and are going there. Which do you see is the first industry use cases, the first industry, or B2C or B2B, that would adopt this? Where do you see, each of you, 1 minute, where do you see this put into good use first? Goldie, let's start with you.
Thanks. So I think the question is, if you're asking what industry would be impacted first, I think the real question is, where can we see enough distribution so that people or businesses would even have the opportunity to do this? Because everything we've talked about through the last, this entire conference already exists. You can do everything you want. You can have supply chains, you can have stablecoin money, you can have cryptocurrencies, you can have DeFi, you can have Chen NFC, that Paul will buy online. But the thing is that it's still not out there in the hands of people. It's still too complicated. And this is the same thing we've been talking about for the 4 years, but obviously we've made huge progress, right? With BNY Mellon offering services and other banks, etc. So my answer to you, where I think the change we will see, and again, obviously I'm not objective here, is the stablecoin industry in payments and transactions, because it is being pushed by very, very large corporations that have a very large user base. And specifically, obviously, I'm talking from my own perspective of Diem, because I think that when Facebook and the other association members will launch this throughout the next year, if it would be a successful launch and it would reach 2.8 billion users, then all of a sudden you would have stablecoins in the hands of billions, and that would create a huge push for merchants, businesses, corporates, everyone to get more digital. That's my reply.
Thank you. Galia, what do you think?
I think one of the most interesting phenomena that's emergent from these technologies is really the realignment of stakeholder incentives. So much of what we talk about in terms of economic ills, economic challenges, are that incentives are not aligned. Facebook's incentives are to maximize revenue. The user's incentive is to maximize privacy. Everything is kind of competing with each other and becoming a game of leverage rather than a game of cooperation. Because money is now programmable, we can kind of code new incentives into the flows themselves. So some examples are pay for success. It's very hard to do pay for success in sort of a manual way, but when you code it into the money itself, when, if X, then Y, if this happens, release the money, put the money into escrow, and if a positive outcome is achieved, pay the supplier. You can think of how that will completely revolutionize essentially every industry. Take healthcare, for example. Today, pharma companies make money when they sell us medicine. But in the not too distant future, we hope pharma companies will make money when they cure us of a disease or of an ailment. And being able to reprogram those incentives into the monetary policies themselves, I think will have the biggest impact on society.
So perfect. I want to turn the next speaking or the next question to Mike. So connecting to what Galia said, the ability to program these isn't just making sure that I am only paying when I'm cured. there's much more tangible directions there of programming regulation rules on top of financial assets. Can you say a few words about that? I know that you're looking into it.
Sure, sure. I mean, look, I think in some ways, like we're talking about, I mean, what's happening in the financial service, the adoption of these assets is kind of, laying the foundation. Now you're talking about, going to the next level in terms of saying, okay, look, being able to actually program these activities. Where you can see a wide array of, impact, whether it can be, for instance, looking at a financial instrument like a bond, right? Like in terms of how the payments and, the terms and conditions can actually be coded, as part of, a smart contract, and really simplify the process, provide the transparency, ensure actually the compliance aspects of it are already built in. So we see enormous potential in that space as well. I think that what's happening now is kind of laying the foundation for that.
Perfect. Fully agree. And Michael, where do you see this impact next outside of financial system or financial services industry?
Yeah, I mean, I think that at the end of the day, we've seen a lot of activity. You guys definitely. I think actually the first conference that I went was an EY conference back in 2017 when in Tel Aviv, where Paul was talking about it. But I mean, I think that at the end of the day, blockchain in some ways, the first use case for that is really the payment in digital assets. And on that front, I do agree with both, Goldie and Galia, that we'll see the ability to remit those payments as being, I think, the first use case. I think that once we will have that, the fact that you can really tokenize different assets, whether those assets are fully digital, right, like the NFTs, or really the aspects around supply chain, I think that will really bring us into the one of the most exciting use cases, right, around trade finance, where to the point around programmable money, we will really be able to streamline and encode a lot of the capabilities that sort of the business operations, right, that basically coupling the movement of money against some services that are being performed into the movement or the delivery of an asset, a service, whatever. And I think that it's not probably 2022, right, but I do think that likely, given what we're going to see in 2022, which is the movement of stable coins into the mainstream, whether this is on the retail side or on the B2B side, I think that 2023 will actually be the point where we could still start extracting the value of real programmable money and the ability to operate against trade finance use cases.
Thank you. And I feel like we should have allocated more time, but unfortunately we're out of time. So with that, I would just like to thank you very, very much for joining. Again, you guys in Israel have a safe, quiet night. And with that, we'll go on a 5-minute break and continue right after. Thank you very much, guys.
Thank you.
Hey, how's it going? Welcome to Break Time. JT Nickel here from ETH Finance, along with my good friend Super Fizz from ETH Staker and the POAP team. And I hope everybody's had a chance to jump on the POAPs. So that was some incredible presentations from those 4 individuals or 5 individuals. This idea, and Superviz, I want to get your take on this idea of stable coins. I think, I don't know about you, but I remember hearing a saying years ago in Bitcoin land that once money enters crypto, it has a hard time leaving. And I think stable coins are making that easier than ever. And a lot of these companies we've been hearing from are improving the velocity and the manner in which these stable coins can just continue to generate and churn out dividends long term. So people don't feel the need to necessarily strictly buy and sell an asset. I'm just curious if you had any takeaways from that.
Yeah, so I have been resistant to stablecoins for a very long time because I've been kind of a coin purist. But I will say I have begun to, instead of ever pulling money out of crypto, I now will park it in a stablecoin. And so for me, the question has been, should a stablecoin be basically a platform pure coin, or should we be open to accepting these commercial style stablecoins? And I don't know where I fall on that yet. I'm asking myself, if stable coins are presented by commercial companies that I respect, am I going to participate in them? And at this moment, I'm still more of a platform purist. But I think as things go forward, as I get more comfortable, I think I'm more likely to participate with some of those commercial style stable coins.
Well, and if you remember back to the Eat Finance 1-year birthday party, there were a bunch of contributors on that live stream that were projecting 5 years out what they thought the world would bring. And I remember Paul Brody distinctly saying within 5 years, this was last year in 2020, he said within 5 years, a central bank will be issuing a US dollar or some kind of a dollar format in digital form that'll be interoperable with the blockchain network. So I think they're coming, they're here. And then the other part of the talk that really struck me was this idea of the idea that people can get paid based on merit of work, right? So like the smart contract systems could issue payments to pharmaceutical companies if they actually cured people and whatnot. It reminds me of like a time on task type of ecosystem where a smart contract can help facilitate payments, automated payments based on performance in a gig economy that we're all in right now.
Yeah, that tied into with something interesting that Galia said that I hadn't really thought about. Why do we need so many coins? And that's like asking, why do we need so many videos on YouTube? We're obsessed with POAPs. Why do we need so many different POAPs? Well, all of these little tokens serve a different purpose. And if they incentivize the right population in the right way, then they don't need to necessarily represent currency. They can represent whatever it is to the person who values them. So when we zoom out from that perspective, there's a lot of unique and specific value offered by a wide variety of coins that don't have to be necessarily monetary. They can mean whatever.
Yeah, people like to collect things. I mean, we like to collect POAPs, but I mean, if you go back to your childhood, the things that you collected that you couldn't hold in your hand were like high scores on video games or items in a video game. And now I think we have this digital generation that is becoming more and more comfortable with holding things in our hand that have tangible value, but they're intangible physically. And so people like to collect coins, and this idea of the long tail of the economy, where the law of large numbers and large baskets of things, necessarily makes up a lot more than the top 5% of what's out there. So we are up. We are going to turn it back over to the EY team.
Hi, everybody. Welcome back. And if the previous panel really discussed about the financial rails, as we've mentioned earlier, in order for supply chain and exchange of payment to converge into one exchange of value. We need both sides to work into this meeting point. And the next panel, the next discussion is gonna talk about the latest advancements in supply chain, in the supply chain world. We're gonna talk about this notion of co-opetition, where more and more organizations understand that they can get more business value by sharing business logic, by sharing business processes with their ecosystem rather than working in a silo. And we will see the panelists talk about that. The second thing that we will see the panelists talk about is the understanding that in order to really scale this, in order to really connect and converge between these two rails, it has to happen over public infrastructure. And we will see how each of the next panelists talk about what they're doing working into this future. We're gonna hear FedEx, we're gonna hear Kona and what they are doing. We're gonna hear Takeda as well. We're gonna hear Provide. And first speaker is my very good friend, Dale Christie from FedEx. Dale, over to you. Do we have Dale?
Sorry, here I am with the ever popular mute button here. I was trying to do two things at once here, including sharing my screen. So again, I bring you greetings from Memphis, US. I know this is a global audience. It's my honor to join you here. I'm Dale Christie. I'm blockchain strategist, business fellow for FedEx, and I value the opportunity to work with Ken, and I have a hard time. Ken, I'm working on that. I promise you, I'm working on that. And Paul and the team. And so again, let me share with you some of our thoughts from that point of view. And since I'm kind of the guy that started the whole reference to co-opetition, let me start with that. Any position that any discussion we start starts with the corner office from a FedEx point of view. And so I want to just let you know that while there are a lot of entities that have some evangelist, some lone evangelist in the lonely corner of the innovation or R&D office from that point of view, in our case, as far back as 2018, early 2018, our chairman and founder, Fred Smith, and Rob Carter, both of the gentlemen that I'm quoting here, walked onto stage at Consensus and blew the place up in terms of that from that point of view. So again, you know, we think blockchain is going to completely change worldwide supply chains. Fred Smith went on beyond that point to say, if you're not at the edge of innovation, then you're really leading toward commoditization and potentially extinction. And pretty hard to get a founder and visionary leader like that and chairman to say things like that, but that's exactly what he said in 2018. So certainly we came out early in this space, not as early as many in this audience. Certainly that's late, but for an entity our size that goes to 220 countries and territories, that realization is pretty profound. Rob Carter followed it up the following year at the Blockchain Revolution Global event by basically just saying, look, we realize that in order for this to be you know, the transformative technology that we're talking about, it simply has to be bigger than us. And so with that, I'd like to go to a very quick, I think I can do it in maybe 60 seconds, but we're going to go back 5 years and we're going to see what we've learned in 5 years. So bear with me here, and there's some sarcasm involved, so bear with me here. First of all, we're all going to get rich with Bitcoin. What's blockchain? Can I sprinkle some blockchain dust on something and it's going to grow 6 feet tall? 3 of us have a blockchain use case and we're all going to sign non-disclosures and create a consortium. Then we're going to treat it just like the internet and we're going to immediately monetize it. Sorry, but I still don't understand blockchain. We're going to wait until someone figures out blockchain and then we're going to jump on board. A smart contract is neither smart nor a contract. My business connects supply and demand. Peer-to-peer technology won't affect me at all. I don't mind co-opetition in the blockchain space as long as I don't have to work with other companies. So there's the last 5 years. Hopefully we've all learned from all of that. And so the question becomes, what have we learned? And so in the FedEx journey, I can tell you that we are 50 years old. We go to 220 countries and territories. And the luxury that I have in this space is that if there is a default position, it's from the International Space Station. And so at that level, there is no FedEx, there is no industry, and there are no borders. And so when we think of going down this path in global commerce of, not a private blockchain, not 60 or 80 or 100 or whatever the case may be, there are industries where you could get that small and you could literally get everybody signed up to a non-disclosure, et cetera, et cetera. But in the global commerce space, it's hundreds of thousands, millions. I don't even know what the number is. It's a really large number from that point of view. And so that's where we went down this fork in the road, that we went down the consortium path and said, okay, let's learn the technology to do those things. But we ran into the wall of how can it scale globally? And so we didn't jump into the open space initially. We got there, and it's not altruistic from our point of view either. We just don't think it's going to scale. So once we got to the point where we realized, wait a second, if you could hang an Apache license or an MIT license or something on the door of this virtual conference room we're in right now and say, if you're okay with this, come on in, it opened up our world to all kinds of things. And we've been sharing that since that time. So on this slide, what is represented on the right-hand side is something very, very futuristic. It is blockchain. Whatever you think of blockchain, I'm representing it here as a city. Kind of looks like Dubai, or there's lots of other futuristic cities in the world from that point of view. And so what does that mean? Okay, well, here on the left is all of us. We've all been saying for a long time, let's just get there. Let's just go do it. What are we waiting for? And as I would say, there's just one problem. There's a canyon that separates us. And a lot of people are trying to cross this canyon by themselves. We think most will fail, especially in the global commerce, in the really large side of things. And based on that connected us back to not only beyond the early references to blockchain as a team sport, but essentially to co-opetition. And it was a word that I pulled out. I didn't invent the word. It's been out there for a long time, but it was a bit of a provocative word, so much so that I had to work through our legal team just to get it and to work our way through it, just to make sure, look, this is not antitrust. If you think of, it's not about where we compete, it's about where we can agree. That's what co-opetition is. And so in order to do that, we think it's going to take all of us to build that bridge across that canyon. And so a couple of key points I want to bring out here in terms of what we've learned. What we've also learned is that peer-to-peer technology is transformative, right? If you and I, if you need a ride and I have a vehicle, we can use a ride sharing app or something like that to connect us, right? To kind of play matchmaker from that point of view. However, in its purest sense, if you and I can find each other and do so in a trusted environment like blockchain, it's going to disrupt a lot of current middleman scenarios that the business model essentially sits between supply and demand. And my first aha moment of that was a number of years ago in the international clearance space, where you and I are now across a border, right? And it has to clear. And now you've got a broker and a forwarder and a brother-in-law, and I know some lady, and there's all these people that sit in that space. And certainly it won't happen today or tomorrow, but if we can look out on the horizon and translate blockchain from process improvement to breakthrough, it gets us there, right? That peer-to-peer technology is important. The other piece about this, so that's the peer-to-peer technology side. The C-suite side of things is that the question becomes, is blockchain a technology discussion? And the answer, of course, is yes. But it's not only a technology discussion. And I think all of us need to further embrace the C-suite, the business discussions. I think a lot of people have spent a lot of time trying to simply say, what's the ROI to this thing? And that tends to narrow it to this little corner R&D office from that point of view. And so the C-suite, we have to speak where they are. Where are they? Let's speak in that language. So in this case, the smart contracts, I know that previous panels, we've talked about some of that, and stable coins and some of the rest of those things. But if I can now reduce my accounts receivable rather than a net 30, net 60, net whatever to a net zero based on the coding, code on a cloud, basically, from that we think of as smart contracts, then you just got the CFO's attention. So the chief financial officer is responsible for that, but they also have risk and opportunity, responsibilities. And so if you can get it to that point, you now need, an IT team that can build that, whoever's building those smart contracts, and you need your chief legal officer who now needs fluent, bilingual attorneys who are fluent in both paper and smart contracts. And so now you're halfway around the C-suite. And I think the future of this is really about how can we connect this to business processes and not focus it on a niche. And I think what that gets us to, the first few years, we spent this who, which is FedEx or all the rest of us, what, which is blockchain, and we immediately jumped to the word when. I think on the right side of this, we have to get to the word why. Once we get to why, then it ties into our other business processes and we go from there. And finally, I just want to let you know that from our point of view, almost everything in our world that we are familiar with has a standardization component. You could go back to the mid 1800s in the US around rail. What's the size or width of the rail tracks, or telegraph, or electricity, or many, many other things. And so certainly we have been focused in, we're founding members of the Blockchain and Transport Alliance. I'm the chairman of the Standards Council. We believe in open and royalty-free standards. We are founding members of the Blockchain Research Institute. We certainly believe that it's going to take standardization. It's going to take all of us. Once we can start working through that, now we start to see the network effects. Now people jump into that space, you get adoption, you do a number of those things. But those that are trying to jump ahead and solve this like a math equation today, I think are actually unintentionally slowing down the adoption of this. And with that, my clock is clicking on to 10 minutes in a few seconds, and I'll stop there. So thank you very much.
Wonderful. Next, we're gonna hear from Provide and Kona, from Kyle and Andre, speak about what they are doing using the public blockchain in order to facilitate logistic transactions. Kyle, Andre, over to you.
Thank you. Can you guys see my screen and hear me okay?
Yes, all good.
Great. Yeah, so just a quick warning, I've been recovering from some allergies. Hopefully we won't have to go to the water too often here today. Also, thanks to Paul and the entire EY team for having us here today. It's certainly an honor. I'm Kyle Thomas, founder of Provide. Started Provide in late 2017, sort of like to be an enterprise DPaaS, sort of distributed platform as a service. It was certainly brutal for a few years. We stayed the course building, and we find ourselves today sort of as a leader in the baseline community. I met Andrei Simonov of Kona at an ETH-ATL, which was an event we organized back in late 2018. And yeah, I'm excited to share with Andre today.
Thanks, Kyle, and definitely had interest in the public blockchains back then. Hi, everybody.
There's some background.
He gave us the warning that our time was up.
My name is Andrei Semenov. I'm a director of innovation for supply chain and operations in Kona. And people usually ask what Kona is about. So Kona stands for Coke One North America. And what we do and why we were formed is to provide a platform with the services to the largest Coca-Cola bottlers in North America. And that's what we do today. We provide them a stable platform and the services to run their end-to-end operations. And what we also do, we innovate for the bottlers and we innovate together with them. And this is how we pivoted to implementing a private blockchain on a Hyperledger Fabric 2 years ago that we already have in production running. And if you look here in the picture on the left, this is a representation of the Coca-Cola bottling supply chain in North America. And these are the companies, the bottling companies who are producing and also distributing the Coca-Cola products in North America. And you can see it's a very complex network. And what we saw is there's an opportunity for us to streamline the supply chain processes within the Coca-Cola franchise system. And this is what we're doing successfully right now. We're removing the friction from the supply chain transactions on a private blockchain. However, there's always this if if we need to scale, if we need to go beyond the system, we need to start working with our suppliers and customers. And definitely we see the opportunities moving from the private to public blockchain, where we can increase the adoption, where we can increase inclusivity. And we didn't want to do this on our own, but we wanted to partner. And this is how the public and Baseline came into pictures, because the way Baseline was driving the enterprise blockchain is through the open source community engagement. And this is where I believe we can reach the maximum adoption and get other companies to innovate, to get the mainnet connected to their legacy system of records. What we're focusing on, we're working closely with Provide on the SAP integrations, but at the same time, if you participate at the Baseline weekly meetings, you see other examples of integrating to other system of records. And this is what excites me, is that at some point in time, we're reached to the point where we can onboard a supplier that already has an off-the-shelf integration into the mainnet.
Thanks, Andre. So I mentioned Provide has sort of found itself positioned as a leader in the Baseline community, helping drive the Baseline protocol and now the standard that's being created. Provide is sort of an easy button. We've created a commercial offering that is kind of an easy button for Baseline, and we did that with the sort of the maturity from what we had built prior in our microservices architecture. Which features like an identity component, a chain and protocol agnostic blockchain architecture, but with a laser focus on the EVM and Ethereum, and in particular, being very resilient against public networks. It also architecture also features a cloud agnostic distributed systems orchestrator, and so when you put that together. It was the baseline for Baseline protocol, sort of, and sort of to echo something that Paul said earlier. The opportunity here, for Provide is really to disrupt the tech stack, and so to do that and really sort of complete this vision that is Baseline. We added a vault service for key management with a focus on advanced privacy and messaging. A privacy service, which is sort of a general layer 2 API for enterprise, for enterprise use, and a payment service for managed transactions, which is essentially like cloud computing for public blockchain transaction execution. Think like just build in arrears sort of thing. And so this easy button allows us to easily integrate these complex multi-party business processes. And that includes like actually connecting to the systems like SAP, Dynamics, ServiceNow, even looking at like Excel. And like this baselining really enables like high fidelity tokenization of the outputs from these processes. And really that's exciting. What we want to do is create these inclusive ecosystems that have much lower barrier to entry from a technological perspective, so that even like the smallest players running Excel, to Andre's point, can connect to the network. They can actually join the network. And what this does, most importantly, is it is going to create it's going to increase the amount of financial inclusivity, for people, for real people. So everyone's, sort of spoken today about how this is going to change every industry, and it's truly going to, but it's going to do it in such a way where real people are going to be lifted up. I guess there's a sort of a rising tide raises all boats sort of a story and message, I think, to be extracted from where we're headed here. So I think the most important part of this opportunity is as these enterprise ecosystems become more inclusive, we're going to see this new degree of financial inclusivity for real people. And so sort of moving from that idea into the opportunities that we're looking at for DeFi, for enterprise DeFi. We've been kicking around a couple of ideas. Certainly some interesting financial discussions to be had, around the viability and the implementation. But a couple of these ideas, one is a buyer discount, which is essentially where the original payment terms just remain in place, but the buyer, or in an ecosystem such as Kona, would get just a discount on their invoices. That's interesting. Perhaps the more interesting sort of idea is what we're calling buyer yield, which is sort of where you can take this liability that you have an invoice that you need to pay, and you can securitize it for example, up to 180 days and see like a 6% APY on that. And I think that the opportunity really to streamline cash management and optimize cash management and streamline modern treasury ops is going to be very compelling with this new paradigm. And I think for the first time we see some alignment around the incentives for this to actually happen between a buyer and a supplier in supply chain ecosystems. Andre, what are your thoughts? Sorry for dominating the time there for a bit.
Yeah, definitely. Thanks for sharing this, Kyle. From Kona perspective, we're really looking into increasing the efficiency on the supply chain and getting the supply chain documents baseline. This is kind of mimicking what we currently have on the private blockchain. And once you have the baseline supply chain documents, you can then apply any other creative thoughts that would come with a public blockchain. So we very interested in that, looking into that, and really hoping that we'll be able to share more in future.
Hold on, it says my screen sharing is paused. 1 second, I'm gonna resume sharing. 1 second.
Perfect. So guys, thank you so much. Are we done, or do you?
Oh no, I'm sorry. There was one more. There was one more slide. Sorry, my screen stopped sharing. So what?
Sure. 1 more minute, please.
Okay. Yeah, no problem. So what's next here? It's production. Like, we're going to production, developing standards around in the baseline community, and really I think this underlying message of inclusivity, for not just in the enterprise ecosystems, but really creating transcendent financial inclusivity for the people, and seeing some certified integrations, baseline certified, and for example SAP certified integrations. We're really excited to synchronize everything and continue building together with Kona, just to really make the most efficient use of the baseline protocol. Andrea, I'll pass it to you, and thanks again for having us today.
Yeah, thank you. Thanks so much. We're looking forward and working hard on making the integration happen. There's a lot of technical work going on, and as we go and kind of converge the startup ecosystem, working with Kyle as well as working with the enterprise software, we'll learn a lot, and we're improving how the integration works. And looking forward to passing our end-to-end tests very soon and bring it to the next level. So thank you so much, and thanks EY for including us into the presentation.
Thank you so much, both. And with that, last presentation, which I'm really excited about, and Gab, I'm gonna pass it over to you. Building a network of cooperation that literally will save lives. Gab, the floor is all yours.
Thanks, Chen. Hopefully you can hear me well. Good afternoon, everybody, and thanks to the panelists, Dale, Kyle, and Andre for their presentation. So let me quickly introduce Takeda and my business unit, because setting the context of our business is crucial to explain what we are trying to do. So Takeda is a patient-focused, value-based, R&D-driven global biotech company with an incredible legacy of 240 years of history in Japan. And we focus our R&D efforts on 4 main therapeutic areas: oncology, rare diseases, neuroscience, and gastroenterology, and 2 business units, vaccines and plasma-derived therapies. So my role in Takeda is to lead the IT organization that supports these last business units, PDT. So let me move on with the slide. If you are not familiar with plasma-derived therapies, these are critical life-saving medicines that thousands of people with rare and complex diseases rely on every day around the world. So what we do is to source plasma from healthy donors and manufacturing therapies for patients with rare conditions in immunology and hematology primarily. So our mission is to invest in building a globally respected and sustainable plasma business that can reimagine the industry. And you see here some metrics of our expertise and our legacy. And plasma-derived therapies is a growing business, but it's also a very challenging business. Plasma is a scarce resource, as you probably know. There is a global shortage of plasma, and the demand of life-saving plasma-derived therapies like immunoglobulin is far outpacing the supply. Moreover, a single rare disease patient may require more than 1,000 donations from donors to support just 1 year of life-sustaining therapy. And the manufacturing process is more complex than the classical pharma products. So we are talking about 9 months versus 3. And this year is a very special year in many ways. So COVID-19 challenged our business and the ability to source plasma and manufacture our medicines, but also offered new opportunities to contribute to the COVID fight with an hyperimmune therapy. But this is an industry that faced a lack of innovations from many, many years. And our mission is to build a globally respected and sustainable plasma business, envision the creation of innovations that can really reshape the industry. And as you can imagine, technology and digital could really make the difference. And as a technologies, they feel the responsibility to drive this movement, right? And what we do every day could change forever this industry, and it really counts for our donors and our patients. And so, as you can imagine, right, making business in this period is such complicated. Every donation for us is unique, and understanding the attributes of every donation really could help us optimizing its use. And being able to trace a single donation through to the finished product is important for patient safety, but it's also a mandatory requirement for from the regulatory agencies. And our business has a complex many-to-many relationships, as I explained before. And for this reason, we believe that using non-fungible tokens on a blockchain to represent plasma donations will increase the level of transparency, trust, and efficiency in the plasma industry. And patients' trust, reputation, and business in exactly this order are our Takeda values, our levers actually that inspire us since 240 years. And to build trust and reputation in the industry, we need to constantly balance privacy and transparency in the network, right? Privacy because we manage personally identifiable information, PII. We need to comply with country-specific data privacy regulations, and we want also to empower patients and donors to control their own data, right? This is actually a new currency, but it's also, our responsibility to let them control their own data. And transparency on the other side, because to succeed in our ambition to reimagine the plasma industry, we need to collaborate across all stakeholders. We need to challenge industry biases that we are experiencing since probably 70s or 80s. And we need to demonstrate trust and reputation in every transaction, right, in this network, enforcing compliance in the value chain. So this shared network will create a single source of truth, will connect stakeholders across the industry, and will boost innovation and the creation of compelling solutions for our patients. That's my last slide, and thank you so much. And hope I've been on time, and back to you, Chan.
Oh, so first of all, thank you, Gab, so much for being on time. We have only a few minutes, and I want to offer one question to everybody. And again, we'll see if we can put everybody on screen. That would be great, and so we can see each other. The question is around, we all say that we need to go public, we need to create ecosystems. The question is how? How do you go to your next business partner? How do you convince him this is the right move? And how do we get more participants onto the network? I remind you, this is not a private consortium that we can protect. let's start with we'll go with the same order we started with. Dale, let's go with you first.
Well, first of all, the co-opetition reference was a blockchain reference initially, though it certainly wasn't limited to blockchain. And so I can tell you back in 2019, we're members of a trade association that not very many people know about, which is called the Global Express Association. And there's only 3 members. It's FedEx, DHL, and UPS. And so to put our money where our mouth is, we actually sat on the same stage in Toronto and talked about our common areas there. Again, it's not about where we compete, it's about where we can agree. And then that year we worked together and provided a position paper to World Customs Organization in late 2019 that I later also provided on behalf of the GEA to the World Trade. And so those are tangible examples of people who you wouldn't normally think of working together can actually do this. Again, it's not an antitrust discussion. This is where we can agree. And then we saw it play itself out in real time in the last 15 to 18 months with the pandemic, where all of us stopped what we were doing and we all started working toward getting ventilators and PPE and other types of things around the world to people that we don't even know. We've never met, we'll never meet from that point of view, but we work together to do that. So I think we all have to stop and kind of catch up to ourselves and look at what has just happened in the last 15 or 18 months and say, wait a second, wherever normal is, it's not going back to where it was in late 2019. We've just proven that we can do this. Now let's apply that in this space. And it's going to take all of us to do it. And I'm confident that working together, we can actually get across that canyon.
Perfect. Thanks so much. Makes so much sense. Kyle, Andre, how do you do that in your ecosystem?
Yeah, I can start, Kyle, here. So I think twofold perspective from my side. First, we need to really educate the business. What we're doing is we're coming from the business perspective. We really want to pivot and address some of the key business issues with the blockchain technology, and only those issues and use cases that are really applicable. And with the way we do it, we do a step-by-step proof of concept implementation going into pilot, and then fixing some tangible results and ROIs in that. And then kind of from the external perspective, I really think that we need to work in more of an open source manner. This is the blockchain technology. This is not a proprietary IP product that we want to build. We want to share our knowledge. And I think our thought is share more than we use, and then let everybody use this as well. And I think that's why we're working with Provide. We're working with Baseline community to build this and showcase how this can be done on the public blockchain.
Kyle, first of all, fully agree. We are doing the same things. That is the way to the way I see it, and the way I explain it also to my partners. There's a lot of money to be made in this space. But that money will not come by ring fencing technology or owning it. Quite the opposite. Kyle, what do you have to say on the subject?
Yeah, I thought that was very well said. I think co-opetition is going to really help bring these opportunities together, in that open source manner. We're seeing it today. We have partners that are delivering parts of the value chain for us that, there's co-opetition involved for sure. And then I think, numbers don't lie. I think getting real use cases measured tells the best story. And I think that's why Kona is sort of leading the way as well in many respects on the public push. Yeah.
Perfect. And Gab, now to you. You work in again, we said it, highly regulated, lots of private information that is really dangerous to, and almost, I would say, illegal to share. Very high risk, but on the other hand, very high reward. How do you convince your ecosystem to join?
Right, but I think what we learned in the last 12 months is that we need an unprecedented level of collaboration and partnership across all stakeholders in the ecosystem to succeed. Especially if your values and behaviors, your ambition is really to help the communities that you serve. And for me, it's always the focus on value. What's the right value of all stakeholders in the ecosystem? And value could mean different things. Could be an economic value if you're partnering with, I don't know, somebody in the supply chain area, or could be a very different meaning for patients and donors if you want. So how we define value for our stakeholders and what's the win-win for all these members in the ecosystem, right? I think this is crucial, and if we can unlock that, every blockchain solutions would be very, very powerful, I think.
Yeah, and I know we are working very hard at that together, and I think with that we are just at time. So thank you so much for participating. Thank you so much for listening. Wasim, back to you.
Thanks, everyone. We're just going to cut for a 5-minute break. Enjoy.
Hey, how's it going? JT here from ETH Finance. Welcome to our little break session here with SuperFizz. So SuperFizz, that last section there, when Dale from FedEx, he brought out the blockchain meme chart of the last 5 years. And the part where he said, can I sprinkle some blockchain dust on that, struck a chord with me, because I remember the early days, it was just like this promise of all these things that were going to be solved by blockchain. And, you know, how many ideas went out the window, but now there's so much asset allocation and shipping and provable supply chain stuff that's now being conducted by these very companies that we were dreaming would get involved, and they're shipping these products. You know, this is real. What do you think about that?
Yeah, so I go back to 2019. There's a guy, I don't know how well known he is. His name is Paul Brody. And he gave this talk called Depth and Scale. And the moment I heard that talk, I was totally hooked, because Paul is talking about like supply chain management in ways that only blockchain can do it. And then today we get here and I hear about the blood, the blood supply chain management being handled in the exact same way that he described it. And it makes me realize when someone is a visionary, when they're talking about things years before they happen, you listen to them and you find out how you can get on that road. And I don't know how I ended up here, but I'm not affiliated with Paul. I just observe what he says and I realize that he gets the future that a lot of us should be paying attention to. So yeah, everything we're hearing today is kind of a fruition of the things that Paul has been talking about for years. So he's like the guy that we need to maybe stop and listen to a little more closely.
Hey, I need to get Paul to my fire pit. We'll do a real fireside chat sometime. I hope he can come and do that. But going back to the plasma thing, you know, we got to be careful because we're Redditors. You know, ETH Finance degens and ETH Staker degens, they may be thinking they can go give plasma to get NFTs now, and we know how hyped that they are about all that stuff. We got to be kind of careful, you know.
If we just need to promise a POAP for plasma donations. I also want to get back to Dale Christie's point, and I know a lot of people have picked up with this, but I've never thought of the concept of coopetition, and I think that has a lot of traction. It's something. It just makes good logical sense for industry that's working in the same direction to you maintain competition. You've got to keep your edge. But where you can agree without being antitrust, without harming the consumer, it makes sense to synergize there. And I really think that has a lot of future potential.
Well, look at the interstate highway system, the railroad system, all those other companies were, they couldn't all build their own tracks. They had to work together to find a common highway to conduct business on. I'll give you last word, and I think we got to turn it back to the EY team. Thanks again, Paul Brody and the EY team, for having me. Go ahead, Fizz.
The big scope here is we are seeing fruition, and that's something that none of us ever really, that we couldn't see 5 or 8 years ago, but it's happening now. And this is really exciting for the whole community.
Hey, good afternoon, everybody, or good evening, very late evening if you're in Europe, or probably a good middle of the night if you are in Asia Pacific and watching this live on WeChat as well. So we're on YouTube, we're on the EY stream, and we're on WeChat in China. And truly, we have a global discussion. So first of all, I want to apologize to my EY colleagues. I was listening to JT and SuperFizz. And I am huge fans of both of them. And in fact, it's not an accident that, Ethereum communities on Reddit are tremendous sources of insight and expertise, right? They have cultivated this kind of incredible expert community in this environment. I do want to apologize to my colleagues though, because if you thought I was insufferable before, like after listening to that commentary, it's going to be worse for a while. It's probably ego's out of control. Now, we talked about supply chain. We've talked about kind of fintech infrastructure. Both of those are incredibly exciting, and they're really starting to mature. One of the other areas where I am a huge believer in kind of the long-term transformational power of this technology is in decentralized information technology infrastructure. So IT systems, they're always on, they're connected, right? We can have objective measures of performance. Jeff Bezos famously said, your margin is my opportunity. Well, the margin of the entire cloud ecosystem is the opportunity for the decentralized tech infrastructure. A lot of this stuff is sitting idle, it's available, and I believe over the next few years, we're going to see it put to work. And what we have now are a series of kind of quick individual keynote presentations by some of the leading thinkers in this space as they mature. And what we're going to do is we've got our first presentation from Yifan He, who is the chairman and the CEO of Red Date Technology. They are the main company behind BSN, the Blockchain Service Network in China, that are building, if you saw the Wall Street Journal article a couple of days ago, they are building a global blockchain access network, and EY has partnered with them. We're very excited about what we're doing with them in terms of delivering access to Ethereum and the Ethereum ecosystem into mainland China. And then we're going to have a series of follow-ons, and we're actually going to go directly from one to the other. We've also got John Wolpert from ConsenSys, David Irvine from MadeSafe, and we have Jack O'Halloran from Scale Networks. So we've got an incredible lineup of expertise, and we're going to go one to the other, and then I'm going to come back for some questions in the closing conversation with them. So with that, Wasim, I'm going to hand it back to you, and let's put Yifan He on, please.
Hi, my name is Yifan He. I'm the CEO and the founder of Red Date Technology. Red Date Technology is one of the founding members of a blockchain-based service network. We call that BSN. Thank EY for give us this opportunity to represent BSN in this wonderful conference. But before I go into the detail, what BSN really is, I want to emphasize how important the blockchain technology is. The way we see the blockchain technology, it's basically a new way to transmit data. The internet is a linear transmission to change that into a broadcasting way to transmit data. So, for example, a business scenario involve like 15 different IT systems from 10 different legal entities. How you make sure the data transmit among those parties in the most secure, most efficient way is through broadcasting. So everybody knows where the data is. Everybody knows other party, how they process the data. So everybody receives data at the same time. So this is a wonderful technology. So the cryptocurrency right now we see is actually the most simplest application based on this technology. Blockchain can do so much. So that's why we built the BSN. We actually have two original purpose to build the BSN. The first one is, this new technology right now is still, very expensive, for developers to try or to access to. So, for example, in China, if you build a very small 3-tier, fabric private chain, it costs you $20,000 US. Okay, but if that's the cost to just try this, technology, nobody want to try. So what we're trying to do is to drop the price to as close to zero as possible. So it's just like internet. If you need $500,000 to build a website, nobody want to, try to build a website in the 90s. So when the price dropped to almost zero, so you can spend $20 and monthly and $500 one-time fee to build one website to run your business, then everybody want to try this. We have seen, so many innovations based on the internet, but the beginning of everything is the price, the cost dropped to a certain level. So that's what we're trying to do. We already dropped build a similar 3-tier fabric chain in China, dropped to almost $20 per month. And the second one is we consider all the chain, no matter it's a private chain or public chain, as intranet, like in the early 90s for internet. So, but eventually, why internet becomes so powerful? Because all the intranet connect to each other with the same protocol. So it makes the data easier to flow and to exchange. So that's why the internet is so powerful. So for the blockchain, eventually, right now every single chain is built based on their own protocols, frameworks, but eventually all of them will connect together with BSN or without BSN. It will happen one day. So that's the second thing, interoperability among all the chains, not only between public chain, it's between private chain and between private chain and the public chains. So what's BSN? Basically, we're trying to build a big environment. BSN is not a blockchain itself. It's basically trying to build a big environment and integrating everything into this environment. So for developers, they can easily to access this technology, very, very, very conveniently and also cheaply. So I will show a BSN architecture diagram here. So actually, this is first time we show this in public. So you can see right here, actually, we have 3 layers, for BSN. The first layer we call the cloud services layer. So basically, is we install a standard virtual database. We call that public city node right now. It's a virtual data center. So we install into physical data center or cloud services and into different cloud services and link all the virtual data center or PCN together with our own protocols. Link all the resources from different cloud and link them together, become a special layer on top of all the cloud services and the resources. So that's what we call our cloud services layer. And within each virtual data center, then we have the second layer, we call that blockchain layer. And we basically is integrating all the blockchain technologies, frameworks, and protocols. We integrate all the permissioned blockchain framework. So basically, you can create your own private chain very, very easily. Also, we integrate, many public chains. So through one gateway, you can access dozens of public chain with very low cost. And we also build the interchain services. No matter it's a private chain or public chain, as long as you integrate into BSN, any smart contract can call another smart contract through a very secured way within the BSN environment. So that's a secondly. When we integrate those framework and protocols, we are not just stack them together. We actually did a lot of work to make things easier. For example, we have a unified CA services. So all the certificates is managed together, no matter it's for public chain, private chain, everything is managed. We have unified gateway. So through one gateway, you can manage, all the private chain you build, and you can manage all the access to those public chains and on different cloud services and in the different location in the world. So, and also we unified the APIs, so you can call a set of APIs to do all kinds of things. And also we have done a lot of work to manage the resources. So you can basically build, different private chains to share the same resources. So that's why the cost is so cheap. The third layer, we call that portals. Actually, BSN is the infrastructure, so we don't really serve end user. So who serves end user is BSN portal. So anyone can build a BSN portal and build the front end interface to build their own building system, the user management system, and they can access BSN APIs and to basically perform all the functions on BSN. So basically, one example is for a small and medium size of cloud services provider. Okay, they can spend $2 million to build their own blockchain as a services platform, and the function probably only 10% of what BSN offers, and they can build the most powerful blockchain as services platform in the world, and they only need to build the front end. Some portal only provide public chain services. Some portal just provide the permissioned chain services, and there's a public portal, private portal. So, and each portal is totally different, and some portal even can integrate their own smart contract, their own products on top of BSN. So with those three layers, we put together and become BSN. Pretty complicated system here. For BSN, we have really picture how the BSN will go. Is the first step is we will spend next two years to basically it's integrate all the cloud services and integrate all the blockchain technology, and also to set up regional portals in different locations, different countries, and different regions. Those portals manage and owns all the their end users' personal data. So on BSN, we don't have any personal data. And also, we plan to open source entire BSN in 3 years. So it's everybody can download our source code to build their own portal. You can even build a PCN, the virtual data center, on your own data center. So and sell your own resources through BSN, and everybody can plug in their framework, provide blockchain services on BSN. We think the final step is in the future. We think if BSN can be successful, then eventually it will become a set of protocols and standards. So you don't even need to download our source code, and you can just build your own portal and your own PCNs and your own framework based on BSN. So you don't even need our code. The reason why we think the BSN is very important is because we see the blockchain technology is the future. We think even probably in 10 years, 15 years, the internet will be rebuilt based on this kind of broadcasting way, to transmit data between different data centers. So that's why we really hope BSN can be a start, because right now nobody trying to build this kind of public infrastructure, but BSN is purely a public infrastructure we want to build. So eventually what we really want the BSN to be is to really be an example, to become a set of standards, so everybody can to really have very low cost access to the blockchain technology, just like we have access to internet like today. So that's our goal, and I cannot guarantee BSN will be successful, but I think no matter what happens, but in 10 years, in 20 years, when people look back and say, okay, BSN did the right thing, that's our go. And that's, basically why we want to do this, Thank you very much.
Hi, everybody. I'm John Wolpert. I'm the chair of the technical steering committee for the baseline protocol, which you might have been hearing about earlier from previous presentations. I work for Consensus and the team in Consensus AG, building a new product and service that will be announced sometime this year. And I guess my role here today is to talk about my experience in the dialectic between the traditional good systems of record and this idea of decentralized infrastructure for information, corporate information in particular. I don't have much to say about tokens or coins, but I have a lot to I think a lot about distributed systems and how we are at the rise now of what we might call verified multi-party workflows. That is, we've been selling business process management software for years. That's usually a story for inside a company. We've bought a company, they have a different system of record. We need to integrate them. They don't want to throw theirs out. And you're into business process management. This system needs to hand off a message to this other system, et cetera, et cetera. And here we are in that world. Problem is, same old problem that we've always had. Bad data in, bad data out. Digital hygiene just seems to be just like getting your kids to clean their room. It's something that you're always going to have to deal with. And now we have to deal with it not only inside one company, but between companies. Here we have giant systems of record, SAP, Microsoft Dynamics, NetSuite, et cetera. And right down to small companies with spreadsheets and QuickBooks and Bills.com. These systems you spend money on, either a lot or a little, and they will tell you what you think you know. What they aren't good at today, without spending a lot of money on integration buses that are kind of silos unto themselves, is whether or not your counterparty believes the same thing. Here's an invoice that says $1,000. It says it's due on this date, but your counterparty that's supposed to pay you never got the memo. They never got the email. They never got the phone call. They never got the fax. And you don't know until you didn't get paid. That's a problem. You don't really need blockchain for that if you spend a lot of money to set up an integration system between your two systems. Or you can decide, which is an odd decision, to have everything on one system of record, say a blockchain. Now, here's the problem with that. If you do that, you have created a multi-party sort of digital nudist colony. Whether it's a private blockchain or a public blockchain, it's a digital nudist colony. It's the private one's just on a private beach. You have 100 companies in that network. One of them gets hacked, the one with the worst security practices that you don't control, and they've given you all a bad day. Good CISOs, and if you look up on Medium, if you look me up, there's a story out there called Common Sense Statement for the Business Mainnet. You might look into that, read that, because that's all about using the blockchain in the right way. Don't put data, certainly sensitive corporate internal data. Don't say we're going to tokenize that and blithely run off and start doing that. You're putting that data at risk. You've created a gigantic threat surface. Now, that's not to say that we shouldn't use blockchain, but don't use blockchain to store your data, not unless you want it to at some point be in front of everybody. And that's not just the actual data. That's the little nuances of metadata or trace data that a good AI could use to interrogate and generate classifiers and figure out your patterns of behavior, who you really are, even if it's pseudonymous. The one executive at a big company, I won't say the name of the company, but they're like, yeah, I can make you in like 7 transactions that are with no identifying information, just on exogenous data and good data mining. So don't think that you're really anonymous, and don't think that if you put stuff on the blockchain that you're not going to be found out. Now, that said, why then do we want to use blockchain in business? Well, because we want to be able to prove that the record in my database is verifiably identical to the record in your database. And wouldn't it be nice if we had a public, always on tamper-resistant state machine that we can use as a bulletin board, as an integration bus between our systems that we don't have to set up every single time we have a new partner or a new consortium or a new workflow or a new invoice, right? So if we can do that, then we can say to investors, hey, invest in my receivables because they're much more likely to get paid because I can guarantee with these proofs on this permanent blockchain, this bulletin board, that are laid down in such a way that nobody else really knows what's going on. But here's a hash effectively that proves that my buyer and my system are in sync, that record is the same verifiably, and that buyer can't say that they didn't get the memo. That's a powerful, simple idea. So I guess the net of that for executives that are not technical and also for CISOs and CIOs, data for databases, hashes or proofs for blockchains. The blockchain isn't really the world computer. I think that was the one thing I might quibble with Vitalik Buterin about when he said it's the world computer. No singleton, no single database can, even without consensus, can handle the reads and writes of everybody's backend. There's a new company called there's a company called Dfinity that calls itself a blockchain sometimes, but really it's not. It's a lot of subnets, and it can scale perhaps, but it's not a blockchain. If it's a blockchain, it doesn't scale. Don't ask it to. Don't try to make it the fastest TPS thing in the world. It's not going to be. It'll never be as fast as a similar system that is not subject to good tamper resistance and consensus. That system is also not good at compartmentalization, access control, data management. What's good at that? Databases. Use them. Use databases. And when you need for a record to be in one database to be verifiably identical to a record in another database, and when you need the workflows that change the state of that data across these different parties, that's where you want to use a public blockchain and the right kind of cryptographic proofs that allow you to do that. We call that work baselining. And if you go to baseline-protocol.org, you can learn a lot more about this standard in the making that should be promulgated out through ISO in 2022. It's on the OASIS Foundation right now. I'll stop there and allow us to proceed.
Jack, my friend, you're up. You're free to speak.
Hello, everybody. How's it going? My name is Jack O'Haller, and I'm the CEO of Scale Labs. We're the core team behind the Scale Network. I will be sharing a few slides, so give me 1 second. All right, here we go. So we're talking about decentralized infrastructure today, and what that means is decentralized infrastructure for a public blockchain network. So the first comment here I want to say is that the Ethereum ecosystem is growing, and it's growing fast, it's growing immensely, but I also say that we are still incredibly early in this process. So my belief is that the next generation of business, finance, and consumer applications will be powered by hundreds of thousands of connected EVM blockchains. And I believe those blockchains will be speaking back to the Ethereum mainnet. Okay, so let's talk about how that could actually function and work, because one thing I think we all know is that security properties are diametrically opposed to creating a better user experience. And it's just the nature of how anything works. If you want to keep something behind a 10,000 pound bank vault, it's going to be very secure, but not very easy to access when you need it, especially from a mobile device. Okay, so and one of the issues with these security properties is high fees, slow block times, very low throughput, and poor load balancing mechanisms. So how do we improve on this without giving up on security? Well, there's always trade-offs. One technique, however, is using multi-chain networks that are connected to Ethereum. And I'll talk a little bit about the Scale network. So Scale is a multi-chain network, and what that means, that's a network of limitless application-specific blockchains. Every business, every application actually gets its own version of Ethereum, okay? These blockchains on the Scale network are Ethereum native, meaning they're managed by the Ethereum mainnet, they're orchestrated by the Ethereum mainnet, they're interoperable and incentive aligned with Ethereum. So when you pay for one, you actually have to pay the Ethereum mainnet for security properties to orchestrate which nodes work for you. The other benefit, there are less nodes working in each blockchain, so you have more high performance and ability to implement some modernized proof of stake elements such as a BFT consensus and other techniques that essentially give you the ability to have no gas fees, half-second block times, thousands of transactions per second, larger block sizes, meaning you can do more with smart contracts, and do things like file storage on the blockchain and machine learning. So let's get into a little bit of architecture here. What does this mean? So having a multi-chain network. So if we look at Ethereum, the Ethereum mainnet, this is one large blockchain. And typically people try to scale this effort by having one additional blockchain or one computer acting as a proxy for fraud or verification proofs. And multi-chain networks are different. Instead of having one side chain or one blockchain or one roll-up operator, you have many blockchains that work with Ethereum, and they're app specific, and they come in many shapes and sizes. They also can all speak with each other and message in real time and have composability between themselves and back to the Ethereum mainnet, okay? So that is a view broadly of what this looks like. Now, whenever we have less operators performing consensus, you have greater risk of collusion, all right? And so one way to prevent that is to start with a very large set of nodes that all have a lot of money staked into it. Right now, for example, the Scale Network has a little over 1.5 billion staked into it for security. And then the Ethereum mainnet, every time you want to have run a Scale chain or rent one from the network, you actually have to pay the Ethereum mainnet. And then security properties in the Ethereum mainnet dictate which nodes would work for that blockchain. And then those nodes are rotated intermittently to prevent collusion, okay? So that way we can have a smaller blockchain with that's speedy and fast and lightweight while having pooled security back to a larger network and with a connection back to Ethereum for orchestration and management. Okay, so again, we're trying to build here a network of app-specific blockchains. These are completely open source, decentralized, community-owned, on-chain voting. And I remember when I was, my first company I started in 2008, we were selling SaaS to the enterprise, and about half the CIOs said, I'm never using a cloud. Like I'm always running things in behind my firewall. And I think we all saw that change. Now this is very an apples to oranges comparison, looking at mainnets and private networks. But I do think that there's similar properties and there'll be a growth and towards open networks. Okay. All right. So enterprises, however, don't like one size fits all models. So we need size and cost configurable chains and privacy configurable chains and other features that can be configured, but done in a way where it's not customized. You're still accessing an open decentralized network. And the way we do this is through containers, okay? So with Scale, for example, you can have a small chain, a medium chain, or a large chain, and these configurations are enabled through Docker and through containerization. And so every node has some shared resources back to the network, and every node has these virtualized subnodes that then can act either in small pieces or be brought together in larger containers and at a higher cost. Okay, last point here I want to make is how do you have a limitless network, okay? And actually, part of it's technology, but the other piece of this, because this is a blockchain, is economics. You need to have something at risk, okay? But you also have to have the right level of reward for people to come and do work, especially in an open network. And so as demand grows for a chain, well, price needs to go up. And as price goes up, more people will want to run servers. Below, we're looking at quantity of servers. Well, demand goes up again, price goes up per node, and then you keep, it's like Uber. There's an elastic price model that as price goes up, or as demand goes up and the network's under more load, it costs more for the service. This allows the network to grow while keeping the price down, in a similar model we see with rideshare platforms. So, and there's I think we could have a whole summit on just economics and blockchain, which I think is a very interesting topic, but that's all I will share today. And the goal here is of Scale, frankly, is to support the Ethereum network and help Ethereum be unlimited and expandable, and grow not just into into dApps, but also support the enterprise as the enterprise embraces open networks. Okay. Well, thank you. I appreciate the time here, Paul and team, and I will stop sharing. Thanks.
My friend David Irvine, you're up, sir.
Hello, thank you, everyone. It's nice to be here and trying to explain the safe network and what is the safe network, what are we trying to achieve here. And our approach is quite driven by nature. What makes us intelligent creatures? Well, it's continuous learning. And for continuous learning, you need quite a lot of things, but one really important thing you need is access to information, to data. But you also need access to private, secure ways of communicating, doing transactions and whatnot, but you really must have access to data. And our approach is really based very much on natural things. It's almost like network like ants, learn like a virus. And what those things have in common is simplicity. When we talk in a decentralized world, there's a lot of talk of consensus algorithms, like a blockchain consensus or other types of consensus. But actually, in the safe network, what we've realized over years is there's lots of different types of consensus. You can have data that forks, which would be double spend in the parlance of the whole cryptocurrency thing. But actual data, information does fork occasionally. You might have two people having two different opinions at the same time. That should be legal. Two people updating a document, that should be legal. So with all that in mind, we basically had a look at what have we got in the world? We've got all these computers connected to each other. And we hear people say, oh, this is Internet 2.0 or whatever marketing people want to say about Web 3.0 or God knows what. And it's not, what we're not doing is we're not trying to have Internet 2.0. Internet, by its definition, is networking between networks. What we're looking at here is humanity's data. There's one set of humanity's data, and that's the thing that we're interested in. So, as I say, intelligence is, and the way the world works is, if you look at the cortical columns in your brain or whatever, and how neurons work, it's very simple algorithms that make that work. Ants, very simple algorithms that make them work. Viruses, we've just seen through the last year. Is a virus more intelligent than us? It's more powerful. Is it more intelligent? Who knows? It's learning continuously. And this ability to learn continuously is what's made humans where we are. The last 100 years of learning has been amazing, what we've been able to achieve. So the safe networks looked at all this and basically said, all of these computers are connected to a network, not to multiple networks, to a network where they can all speak to each other. Why not actually connect them? Let people put information onto this network. Let everyone else on the planet who can connect to this network absorb that information. And that's critical. That's a critical component. So people will say, that's quite ambitious. And it is ambitious. It's very ambitious. So far, we've had to learn an awful lot in the past few years, which has been fantastic to learn. And what we've learned is simplify the problem down. Try and get to be like an ant doing its networking or a virus doing its learning. Simplify the problem down. None of these things are based in advanced calculus, advanced maths, or whatever. It's very simple. The world works with simple algorithms, and one of the key components is that algorithm's not a blockchain. It's not a directed acyclic graph. It's not one of these things. And for us, I think, is it's humanity. We have to be able to look and say, if what we've got is complex and we can't find it in nature, it's pretty much wrong. It's almost guaranteed to be wrong. Richard Feynman was a great proponent of that. So we've created a network that anybody can join and not only store data, static data forever, which is an absolute essential. It's one of the fundamentals of the network, but have dynamic data forever, perpetual dynamic data. As we learn more, the network absorbs that and distributes that information to everybody who wants to read it. So rather than an internet, it's just a network. That's it. The Safe Network's just a network. It's not Internet 2.0. It's not Web 3.0. That's just the stupidity of humanity. Can I be the next whatever? One network that's populated by all of humanity, and anyone that can go onto the network can put data on it. There's obviously a token. There's a cost to put the data on it. It's a tiny cost. When your computer's on this network, it's giving up resources and you're paid some of these tokens that you can then put data on. Nobody ever pays to read the data. No human is involved in how much does that cost? How much is the transaction cost of this? The network calculates exactly how much it needs to cost to be able to maintain itself. So a truly decentralized proposal, not a centralized consensus mechanism, not a centralized ledger, not a decentralized ledger, but actual intelligence and the ability to basically allow anyone to build applications, to put on their scientific paper, to learn and learn continually. And that's an important thing. No monthly fees. Build a website, it stays there forever. It can never be hacked. It's all basically the content's equal. The hash of the content's equal to the name of the data. You can't interfere with that. So where we are now is we're launching testnets. I think we're at testnet 5 at the moment. We have pulled all this together with multiple consensus algorithms, non-forking algorithms for the human thing of money transaction, forking algorithms for data that can actually, obviously, continuous learning for the planet means massive amounts of concurrency and concurrent updates. And it's not however many tens or hundreds of thousands of transactions per second. The network has to be able to cope with the whole of humanity updating itself continually. Data lasting forever or perpetual data is a critical component of the network. In years to come, people have to be able to read data from years back. Brewster Kahle and I have discussed this a few times. Brewster's the chap from the Internet Archive, a really nice guy to speak to as well. So humanity has to continually learn. It has to continually have access to data. Every single person on the planet, not 1 or 2 billion of us that are rich enough to be able to get internet computers and whatnot, every single person on the planet. And if we can bring all 8 billion brains together rather than just a couple of billion, then we'll learn even faster and humanity can move forward faster. But so the Safe Network proposition is it's quite ambitious, but if it's correct, it doesn't really matter how ambitious it is. If it's logical, it doesn't matter how ambitious it is. If this is what we have to do as humanity, it doesn't matter how ambitious it is. It's basically what we have to do. If we want to cure disease, if we want to really understand the next problem in physics, the next problem in maths, we have to have access to data, and we have to have as many people accessing that data as possible. We have to not have third parties. We have to not have data centers. We have to not have large corporations between people and their data. That all has to go away. That's completely irrelevant. And some people may say, oh, you're competing with Amazon or Google. It's no, we're looking to make that irrelevant. That should be irrelevant. The Internet Archive should be irrelevant. Data should be stored forever on, not the internet, the network, the Safe Network. And hopefully we are one rung in that ladder of a network for humanity by humanity. So a network for the people, built by the people. The way we do that is simplify all of the algorithms so that everybody can understand it and then move forward. But I'm probably going flying over my time here. I'm not getting any.
You are indeed, David, but very, very worthwhile listening to. In fact, we are at the time limit for this presentation, but I want to say thank you to the participants, because what we've had are 4 incredibly compelling visions of the future in terms of scaling up this. And as David said, every single one of them, in my opinion, is very ambitious. And I think in many ways, they all represent fundamentally new use cases for blockchain technology. So that part is itself very exciting, right? And I'm excited about this. Now, before I go on, I'm about to jump into a demo of blockchain.ey.com. Before I do that, I want to have a couple of reminders. First of all, please mark your calendars. September 14th, we will be having an in-person blockchain event in New York City. Information to be shared in the near future. Secondly, please don't forget to claim your proof of attendance protocol token. There were some minor technical problems with the QR code. Those have been fixed, and the QR code is still open. So hopefully that's going to be showed a couple more times as we go forward towards the end of the day. And then finally, there's never a bad time to wear a unicorn t-shirt. It's always good. Now, let's get into blockchain.ey.com. So I am joined now by a bunch of my colleagues from EY, and we're going to take you through some of the work that we have been doing over the last year. 18 months ago, we made a strategic decision to implement and transition our core technology and our products into a blockchain as a service environment that would make it easy for companies to connect into the digital ecosystem. And we're just going to show you 4 of those kind of core capabilities today, right? We believe blockchains are the glue that is going to link together business ecosystems. And to do that, I kind of think there's 4 things I would like to be able to illustrate for you to see how that's going to work. Number 1, you've got to be able to connect to the blockchain. And so we've invested in platform technology that makes it easy for companies to connect first and foremost to the public Ethereum blockchain, but not just the public Ethereum blockchain. Secondly, we should be able to easily tokenize assets and products on the blockchain, getting data directly from our ERP systems when we're ready to do so. We should be able to securely enter into and interact with smart contracts on the blockchain and to transact with confidence. And we should be able to set up our own business agreements so that they are secure smart contracts deployed in an ecosystem and executing automatically. So we're going to start with our first demo, which is all about connecting into the blockchain ecosystem. And that is where we bring the blockchain.ey.com platform into play. And joining us is Isabella Fascini. She is the global product owner for this platform. And Isabella is going to give us a quick demo of the blockchain.ey.com platform level capabilities. Isabella, over to you.
Thank you, Paul. Hi, everyone. So as Paul mentioned, I'll be demoing the platform. So let me share my screen. All right, you should be able to see it. So right now, I'm actually on our homepage. Anyone can navigate here, create an account. You'll be able to see a sign in or sign up button right here. But given I'm already logged in, I'm gonna go ahead and go to my dashboard. One of the first things we did is build this dashboard where you can see basically anything you or a company subscribe to. So you can see here, I have all the products that I have access to, including some that are internal only for us to use, and also some of the products that we'll be presenting today to you. On top of making it easy for you to see all our products, we built functionalities that are very common across SaaS platform, like being able to update your name or email. And one of the cool things that we just did in the past few months is the ability to translate our entire platform to other languages. We started with Mandarin to support our local instance in China. And with a click of a button, all our products and our entire platform will be able to be translated. And now we can really support our global markets. In the future, as we release to new markets, we can potentially even be translating to new languages like Spanish and any other that user demands come through. So I'll switch to English so I can continue with the demo. And going back to my dashboard, one thing that we have is, as a SaaS platform, subscriptions. So one of the things that we did for the past few months is this concept of implementing an organization as part of our platform. If you create an account with us during our last summit, you probably saw that you're able to have a user account and really start exploring our products. And throughout the past few months, we have introduced this concept, also very common on SaaS platform, of I can belong to more of one organization. So as an end user, you have your default organization, but as an enterprise, you want to start collaborating and inviting your coworkers to really start using our products and our enterprise services to perform business on blockchain. So as you can see here, I have access to the products, not the same products, because now I'm part of another organization. And the ability to do that is not only through subscription, but simple things like you're able to update your organization information, add the logo of your organization, and really invite people from your organization to start collaborating. So like any other SaaS platform, you can allow specific roles and permissions. And one of the cool things we have also done in the past few months is this ability of integrating with our platform through APIs. So you can quickly create and generate a credential, and I can go ahead and say it's going to be an ERP integration. When I generate this, it's going to provide me a specific client ID and client secret that I can then copy and start that setup. So really able to quickly be able to start integrating with our platform and using our services through our API. One thing that Paul also mentioned is this ability of we want to be able to set up the network and multiple networks for our clients. So we want to be able to set up, as soon as you create an account, we're automatically creating a testnet wallet for you. We want all our end users to create an account on BC or on blockchain.ui.com and be able to start using our products without having to go through the process of setting it up. So we have created this ability for you to get onboarded, use our testnet, and also be able to add additional networks. As Paul mentioned, we're also supporting private networks. And for a local instance in China, we're also supporting for BSN and Pisco BCOS. And from an end user perspective, making it extremely easy for you to, with the switch of a button, be able to exchange between one network and another. So really with the mindset of we want to be able to scale, we want to be able to bring our enterprise customers and onboard them as quickly as possible, but also making the whole onboarding to use different types of blockchain as easy as possible. So with that, I'll pass it to my colleagues. So, and back to Paul for us to really explore the other products that we have on the platform and how we're using this network setup. Back to you, Paul.
Isabella, thank you so much. So stuff like this really gets me so excited. When you see that button, you can click it over into the mainnet and start spending lots of money on gas and make real tokens. It's incredibly exciting. So the next thing that happens, obviously, is once you have made your product, once you've connected your company to the network, you want to tokenize your products. And so I want to hand this section over to my colleague from Italy, Federico De Poli, who is going to talk to us about how to build your entire supply chain in a blockchain ecosystem model and then start tokenizing your products. So Federico, over to you.
Thank you, Paul, and good morning, afternoon, evening, everyone. So what I would like to show you is basically, as Paul said, how you can tokenize starting from your value chain. So we're talking about real business. So to do that, I'm jumping into Upschain, and as you can see, we have a lot of different applications. Let's jump into the traceability one, which is the one that we're going to see today. And basically in traceability, you can create your value chain, so you're able to actually define your steps and your items you want to trace. To make save of time, I've created a one for you today. So I'm gonna jump into my premium Italian wine value chain and just show you what I did. So as you can see here, we have a recap. I've created that yesterday. So you see also when I have created. I just want to guide you quickly through the steps to show you a few key items and elements. The first step we have to set up our value chain is to define the items I want to trace. So right now, what I'm defining is that I want to track grapes, I want to track wine, I want to track a case of bottles of wine. And I can set the type, I can define the dependencies, and most important, I can decide if I want to tokenize those items. We're gonna come to that later. I can also define if I want to codify with something. Right now, we don't have any options, as you can see, but we are going to add options in the future to follow standards, globally standards like GS1, so you should keep an eye for that. Moving forward, we have defined the steps. As you can see, we have a step or more steps for every item. We are creating also a token into one of those steps. For example, for the grapes, we're just creating it once. And in the second step, we're going to update the token metadata. You can see also the choice to define how you want to upload the data. It's going to be our tool from the UI, but you can also use API integrations to basically quickly ingest your data into the platform. The last step you have is to define which kind of data you want to trace. Basically here, I have set up some kind of fields to track for every step. I'm going to step out of this screen and just show you the recap. So as you can see, we have different data traced for every step. What we did last was to connect our tokens to our value chain. I have done that as well for you today. So we have for the grapes, one kind of token, for the wine, another token, and for the case of bottles of wine, another token as well. I can also create my tokens, of course, and link them easily to my value chain, so I can easily connect my business to my tokens on the blockchain. Once that is done, I go back to my list, I can jump into my value chain, and I can move to create my first NFT on the blockchain. So as you can see, for every step we have defined, we can insert and create a new token with a token ID. We can assign the metadata to the token. So for example, I can define that I have no chemicals used for my grapes, and I can put a simple token. For the sake of time, I'm going to skip that and show you that you can actually start from a token and just add some more information. You can also create a new token, for example, a new wine token, and put a new code, a reference, previously created grapes code, grapes token. So we can create that sort of references between the tokens as well. Last thing I want to show you before going into the tokens, let's create our bottle token right now. So I'm going to do that for you. I'm going to reference a batch of wine that I have created already. I'm going to put 12 bottles, and I'm going to create my token. And as you can see, we're hitting the testnet. We know how much it's going to cost, and we can continue. So basically, right now it is minting. We do have a feature for our user to see all the transactions. As you can see, the last one is spending. But when this is going to be done in the bottling, we can see it's minting. We can go to our tokenization functionality, and we can see that actually we have our brand new bottle token right here, ready to be shown and also to be transferred to some users on the blockchain. So if I jump into the details, you can see all the data that we store, and we can see also the reference to the batch of wine. We can also add tracking the location, which is a very nice feature because it allows me to basically feel and get my position. So we can assign a physical position to my token. I'm going to put my house here just for the sake of continuing. We can put all the details about the address, what is happening, and I'm going to show you on a token that I have created is that basically we have our coordinates set in the metadata, and what we can do through our Explorer Visualizer tool is to visualize the location history. So we have 1 point for every change of the location. We do have the history of transfers as well. So for example, this was transferred today and was coming back to me during the day. And then we can also go and checking into more details. So we can see exactly the tracking and the history of the location changes, including the events that we have. So what we've seen is upstream traceability, leveraging our tokenization capabilities, plus our Explorer Visualizer tool, which is the tool we use to visualize the data, visualize the business information of what is happening into the blockchain. That's all from my side. Back to you, Paul.
Thank you, Federico. So what's really exciting to me here, and well, I guess all of this is exciting, but what's really cool is what we're doing is we're laying this foundation where we can tokenize all of the raw materials and products that exist on this supply chain. And then we can start tracking these items as they move through the production process and out to the end. And you can see here why we have an EIP submitted around standardized location data, because we want that to be able to scale and be widely used across the industry. Secondly, obviously right now, gas costs in Ethereum are high. And so what you can expect to see from us is not only will we be connecting to different blockchains, but we're going to start adding layer 2 solutions as well, so that we can start to ramp up the volume of data and transactions that can be served in this system. Now, we've talked about connecting to the blockchain. We've talked about tokenizing assets. Let's talk for a moment about how do we understand the smart contracts that we are likely to enter into? How do we understand the smart contracts that are defining assets, right? If you bought a NFT based on a smart contract with a guarantee that never more than 100 of those will be issued, how do you even know? Those are all critically important questions. And we believe in the same way that large companies would never deploy 1 million PCs to their employees without antivirus and security tools, we believe everybody on blockchains won't deploy business transactions on chain until they're able to easily evaluate and manage some of the complexities of smart contracts in that environment. So to talk about that and to show off the newest version of our smart contract review and testing tool, we're joined by Omer Geisman, who is in Israel right now. He's part of our blockchain security team, and he's going to walk us through an actual live testing scenario. Omer?
Thank you, Paul. So the Smart Contract Testing Studio is actually a platform to create, run, and share testing scenarios and different simulation for basically any type of a smart contract. Smart contracts today are becoming quite more popular, but also quite more complex. And we believe that there is an actual need for a tool that anyone, and not necessarily developers, can use to interact with smart contracts and better understand the underlying logic, and also to do it in an environment that is risk-free. The testing studio is actually a codeless environment that enables you to interact with smart contracts, and to do that without no setup. There's no need for a wallet or setting up a node. You can just log into the tool and start interacting with the smart contract that you upload to the platform. I'll be demoing, the theme today is NFT, so I'll be demoing a very basic testing story around a simple NFT token. The story behind that NFT and that smart contract, that has a limited supply. It's a limited edition NFT that has up to 10 items, and as part of the creation of that smart contract, those 10 items are created, and then we will see if we are able to actually mint another token and exceed the supply that we have. I'll run the testing story that I've predefined before, just to make this run faster. And as you can see, the testing story has failed. But let's first run through the different steps of the testing story. So the first one is to deploy a smart contract. As you can see here, I uploaded a smart contract that I have created. There are also other ways to interact with Etherscan to deploy a smart contract that already has been deployed to the mainnet. I'm running the main contract, which is the ERC-721, and using a Solidity version 7.0 that was actually automatically extracted from the code. The next step that was successfully executed is running one of the read function of the smart contract, the max supply function. And as we can see, the max supply is 10, as was defined in the smart contract. The total supply, which means what is the current actual supplies of items that we have in the smart contract, we have 10 items. So we already have the maximum supplied, created, and minted. So what makes sense now, and it's actually working well, we tried to execute the minting function, and it didn't go well since it's supposed to fail. As we can see, the smart contract has reverted this action because there are no more tokens here that we can produce. So what I will do, so this works as expected, and the logic of the mint function actually works well. Let me quickly just delete this action and rerun the test. But now, instead of, sorry about that, let me jump in again. Here we go. So as I said, I will run again the testing story. But now, instead of trying to mint the token and to see if it fails, I will try to burn one of the existing tokens. And so now I have a free slot for a new token. And as the owner of the smart contract, that went well, that item was burned or eliminated. And now I can actually mint an additional item to that limited edition. So this is a quite basic testing story for a simple NFT token. And I've used the empty state environment, which basically based our testing on a sandbox that has no information on the balances, and the transaction history of the smart contract is empty. What's exciting here is the ability to simulate the mainnet. What actually happens behind the scene that we're forking the mainnet, and we are using real mainnet data. That means balances or transaction history, and all the testing and the simulation that we will conducting will be based on real mainnet data. Please join us on day 3 for a DeFi session where I'll be using the mainnet simulation to simulate complex interaction between several smart contracts and to see how this tool can make greater value for each one of us in the DeFi space. Thank you, and back to you, Paul.
Paul, my friend, sorry to interrupt. You're muted.
I'm unmuted now. How's that? I'm live again. Okay, so my one and only muting mistake of the day, I hope. Cross my fingers. Now I can't find any wood to touch. Anyway, Omer, thank you very much. That's excellent. So Omer's little brief reload of the page is how you know we're doing a live demo, and my having to unmute myself is how you know we're doing a live presentation. So we're actually here and in 3D. So we talked about connecting to the network. We talked about tokenizing assets. We talked about enabling kind of smart contract testing. I want to finish up now with a short demonstration of ops-chain network procurement. And our last demo is all about taking your own business agreements and putting them on the blockchain. Our vision here is actually relatively straightforward, right? Companies' primary interactions with each other are all about buying and selling products and services to and from each other. And that core interaction is something that we are much better at negotiating agreements on than we are at actually sticking to those agreements, especially kind of some of the big rules around them, like volume discounts or rebates. So our vision is very simple. Let's turn these business agreements into secure, private, on-chain smart contracts that you can execute reliably, and they'll keep track of your discounts, your rebates, your key terms and conditions. And to give us a little walkthrough of that product is our product owner, Zach Mills. So Zach, over to you.
All right, thank you, Paul. Hi, everyone. I'm Zach Mills, the product owner of EY Ops-Chain Network Procurement. In the next 5 minutes or so, I'll talk you through the product we have today and the vision for the product going forward. Please be sure to put your questions in the chat and we will do our best to answer them. So as stated multiple times before, our vision is that enterprises will use mainnet as a common medium for communication, replacing existing fragmented EDI and XML messaging that is frequently used for enterprise-to-enterprise messaging today. So real quick, a few of the benefits of communicating on-chain. We can communicate with business logic, enforce pricing contracts and pay invoices privately. Enterprises can use those tokenized assets end-to-end in their procurement flow, which we will show in a few minutes. And enterprises can tap into the financing capabilities of DeFi, which is functionality that we will build out in the future. So you should be able to see my screen now. We have our Ops-Chain Network Procurement product, and this will facilitate the synchronization between business systems, namely ERPs, Ethereum mainnet, and other products in our suite, such as Ops-Chain Traceability and Explorer Visualizer. So let's get into the. So on the left side, you can see a seller account organization that I created. And on the right side, you can see a buyer. So before the demo, I went ahead and created a business partner relationship between these two organizations using their Ethereum wallet address. So what I can do from the buyer perspective is go ahead and create a contract. So let me do that. And to keep the same theme going, we're going to procure California Chardonnay. So I'll put that in here. This is barrel fermented aged white wine with citrus notes we are going to procure, not ferment. And the business partner we will select is California Wine Company. And this is the same business partner that we have on the side of my screen. And I want this contract to be valid through Friday. So the first 100 bottles of wine are going to be $10 each. They will be $9 each through the 500 and then $8 after that. So I can sign and submit this contract. Let me refresh that. Live demo. Okay, California Chardonnay. $10. Okay, so the contract has been created and signed. So now from the seller perspective, I can go to my contracts tab and you should see this new contract ID that popped up from Sunset Wine and Spirits, which that is the name of the buyer over here. So the seller can now countersign that contract. And in the near future, this will push that commitment to chain. So now that we have a contract that exists between these two business partners, of course, that is a mutually agreed upon contract with that pricing that was approved by both parties. I can now, as a buyer, go and create purchase orders using that contract. So real quick, what I'll do is double check the contract ID starts with DA3. So I will select my business partner. DA3 is the contract ID. And I want to procure 406 of these. It's for a total value of $3,754. So this uses that contract pricing that we just agreed upon. And so both the buyer and the seller know that they are getting that negotiated price. So I submitted that purchase order. And now from the seller perspective, I will go and look, and here it is. Purchase order starts with B51. I can click on that. And from the seller perspective, I can accept that purchase order. We will soon have functionality where we can tie or associate tokenized goods directly to this purchase order, which later on will let us facilitate automatic transfer of those tokenized goods along with metadata, both public and private metadata updates along the way. So we are quite excited about that. So I can go ahead and accept this purchase order. It says it's been accepted. From the buyer perspective, I can click on the purchase order and you should see, let me refresh. Okay, it has been accepted. And once those goods are received and in my warehouse, or in this case at Sunset Wine and Spirits, I can click confirm receipt. And that is likely the trigger we will use in the future to facilitate the automatic transfer of those tokenized goods. We will also probably build out functionality for automatically creating the invoice on the seller side once those goods are received. So you can see now I can issue an invoice with that purchase order and send it to the buyer. And then from the buyer perspective, I will be able to see, is this it? Yes, this is it. I will be able to see the invoice come through, and in the future, we will have the ability for buyers to pay with stablecoins. So to quickly summarize, these two companies first became business partners within OpsChain using their Ethereum addresses. The contract was mutually agreed upon by both parties and pushed privately on chain. Purchase orders can be created that we know will abide by that contract pricing. And then invoices can be generated upon goods receipt. We'll have that functionality for tokenized goods and stablecoin transfer in the near future. So that wraps up my demo. If you have questions about the product or would like to reach out, I'm available on Reddit, just like most of you. My username is zmiltz, Z-M-I-L-T-Z. And with that, I'll pass it back to Paul. Thank you everyone for tuning in.
Zach, thank you so much. That was amazing. I am a little bit nervous about the pricing there. It sort of implies that at the price level that you picked, it implies, I don't know, maybe a nice boxed wine more than a bottled wine, but still probably a very good deal. So there you have it, a quick tour of blockchain.ey.com. That's not even all of the stuff that we are doing, right? Right now, we're about 75% of the way through our migration of all of our kind of core products, assets, and services into this integrated environment. But you can see where we're trying to go. We want to make it simple, safe, and integrated for enterprises to do business transactions on chain, and not only to run their business transactions and processes, but to tokenize the inputs and outputs so that they can be inserted into DeFi ecosystems for financing and payment. And I want to be also very clear that we are working closely with the Baseline Protocol Group, and something that's enormously important to us is the simple principle that we will use the best available privacy technologies, because no enterprise wants their secure, sensitive business information stored on chain, right? We want to make sure that that never happens. What we're going to put on there is mathematical proofs, links to off-chain data, verification of services, but not the underlying data. So that even if you get hacked, your sensitive business information will not be decrypted and exposed for all on chain. So that is a very, really, really strong privacy commitment that we have. So coming up next, our final discussion of the day, we have a fireside chat with the CEO of Circle, Jeremy Allaire. We'll be back in about 3 minutes for that event, so please join us then. This is our last chance to get your proof of attendance protocol. So those token logos will be up as well, so you can scan those for the QR code and get that delivered to your wallet. See you in just a couple minutes. Okay, good afternoon, good evening, good middle of the night, or actually good morning, I guess, if you're in Asia Pacific. This is our last segment of day one of the EY Blockchain Summit. This is your last chance to claim your proof of attendance protocol, and it is also my last wardrobe change. Now, we've been saving, I think, some of the best for last today because our closing discussion is a fireside chat with Jeremy Allaire. Now, before I turn this over to Jeremy and ask him a bunch of questions, I do think he deserves an introduction because he has an incredible career and history. Started all the way back in the 90s with creating Cold Fusion, which was one of the earliest web content management and server tools. Since then, he's held a bunch of very important jobs: CTO of Macromedia, CEO of Brightcove, right? But it is his job today that we are most interested in because he is the CEO of Circle, the people who have brought us the US dollar coin, right? Which I think is really, other than Ether itself, the single most popular asset on the Ethereum blockchain. It is the foundation of a huge amount of the work that's being done in the DeFi ecosystem. And it's enormously important, especially to enterprise and financial services companies, because they need and they transact and they have as their kind of main currency US dollars. As I mentioned in our keynote conversation this morning, we're on track to see about $7 trillion of trading in US dollar tokens on the Ethereum blockchain. And I personally believe that regulated, privately run stablecoins like USDC are in fact the most likely future implementation of central bank digital currencies. So I've got some questions for Jeremy, and we've also picked up a few questions from the Reddit forum, and we're going to go for about 25 minutes of nonstop Q&A. So Jeremy, welcome. Thank you so much for joining us.
Thank you, Paul. It's really, really fantastic to be joining you guys for the event again this year.
So I've got to ask you, I have a simple question. How much can you sell a dollar for, right? I mean, it seems like kind of the toughest commodity business of them all, because I'm pretty sure most people aren't willing to pay much more for a dollar than a dollar. So tell me, what is the Circle business model?
Well, it's a great question because institutions can enroll in a Circle account, and obviously individuals can say enroll in a Coinbase account and create and redeem USDC at par at no cost. And so that's a really important thing. And maybe before fully answering the question, I'll just sort of step back and talk a little bit kind of philosophically of how we've approached this, and without getting into too much history, but effectively when we started thinking about how to implement a protocol layer for fiat on the internet, that goes back like 8 years, but then specifically about 4 years ago when we were kind of starting the R&D on what became USDC, what was really important was that we could create something that could be a standard that could be surfaced to the marketplace as something of more like a public utility or a market infrastructure that anyone could connect to easily. And that could be third-party creators of other financial products and services, developers building new protocols like DeFi protocols, wallets, exchanges, other things. And in order to really create something that could be adopted as a standard, you really needed it to be open so that it was something that where the IP was out and open source and sort of governed, which is why we created a consortium around it. And then specifically from a go-to-market perspective, really making sure that the market as a whole could create and redeem USDC and obviously have a good understanding of its compliant nature, its regulated nature, and its full reserve nature. And so those were all critical design principles. And I think that's really worked well. And today, obviously, we sort of sit at around 17 billion USDC in circulation. That's up 30 or 40x or so over the last year, and that's significant. Now, for Circle specifically, if you look at the different things that we have going on, the first is obviously just helping support and operate this infrastructure as a regulated financial institution, making that available. That 17 billion is a set of reserves that are kind of governed under a reserve investment policy from center. That's also governed by the various regulatory licenses that we have that really constrain what we can do with that electronic stored value. But that does generate revenue for the company. that sort of reserves. I think more importantly, we look at this as a building block for a whole suite of payment and transaction and treasury services that ultimately we think every corporation in the world will want and need. And so we kind of think about internet connected companies increasingly wanting to be digital currency native in how they operate. I mean, obviously things like what you guys have been building is a tremendous example of how more and more of the fabric of commerce can move on chain. And so for us, Circle operates also a suite of account and API services that we do monetize. We monetize with usage fees, transaction fees, other things that are utilizing our infrastructure as a service. And then we have other products that maybe we can talk about as well, which are really focused on enabling people to put their USDC to work through things like interest rate markets and yield markets and things like that are emerging around digital currency.
So actually that's a perfect segue because consumers are all in on stablecoins. I have a bunch of USDC. I have it in an interest generating account. Talk to me about kind of the emergence of these yield generating markets that we are seeing in this environment, and also what the usage profile is by individuals versus, say, enterprises.
Yeah. So maybe stepping back and then drilling in. I mean, I think the stepping back piece here is what's really, really powerful about something like a stablecoin like USDC combined with public chain infrastructure is that you begin to be in a world where money effectively is like a native data type on the internet, just like a piece of content or other form of data. And so an expression of a dollar as an actual digital artifact that can be interacted with code and programmed in different ways is really profound. That really has never truly existed in quite the same form that it does now today. And what's exciting about that is this programmability allows people to build ways to allocate capital, to facilitate more complex forms of economic contracts, whether those be like traditional financial contracts like borrowing and lending, or other types of financial contracts like options and derivatives. Those are obviously well understood examples, but the sort of innovation curve really starts to go out when you start thinking about the programmability of money. And that was one of the things that inspired the original founding and formation of Circle, was this idea that over the long run, once you had a protocol layer for money on the internet, once money was a native data type on the internet, and you had these public networks that could execute code, that things like financial services, the building blocks of financial services, which is really what I'd like to think of as like the time value of money. You have money, you don't need it, you want to give it to someone else to be able to utilize. You don't have money, you need it for creating a product, a good, a service, buying a house, a car, whatever it is. That those forms of capital allocation, which is the kind of core, that capital markets activity is the core of financial services, that could increasingly move to be run by what we call smart contracts today, but we thought of as eventually kind of autonomous machines on the internet allocating capital. So fast forward, here we are today, and we're seeing in particular over the last 18 months, but it's been going on for longer. It's been going on for several years, but really accelerated over the past 18 months is with the wide availability of reliable, trusted dollar digital currencies like a USDC, and then growth in essentially capital allocators, basically, both in a decentralized way and a centralized way. You've seen this incredible growth in markets for capital. These markets for capital are markets that are established around things like USDC, and certainly these include other cryptocurrencies really, really broadly. When you look at the markets for capital that are now existing on a blockchain, they go certainly, excuse me, well beyond just stablecoins. But today, I think there's probably well in excess of $100 billion that is locked or lent into these either centralized or decentralized services. And with that locked capital, people are borrowing, and that borrowing is generating interest rates. And those interest rates are then paid to people who are lending out through them. And so that has grown very much on the retail side. I think we're really right on the cusp of it growing in a massive way on the institutional side. So regular way corporations who are sitting on enormous piles of unutilized cash. We're at record levels of cash. And when I say cash, we're talking about commercial bank money in the form of M2 deposits, record levels of cash in the world today. And this is obviously a market that is creating interest rates that are quite dynamic. So I think you'll see significantly more corporate participation in this going forward.
So talk to me about corporate participation, right? As you say, I also believe we're going to see much more enterprise participation. They're sitting on lots of cash. They're thinking strategically, not just about the value of this system, but also the future growth opportunity. What's slowing them down? Is it regulatory issues? Is it a lack of familiarity? And particularly if it's regulatory, because we hear a lot of talk about regulation in the ecosystem. What do you think needs to happen in order to kind of open up those floodgates?
I mean, there are a lot of things. I think just at a high level, for many corporations, and just to be specific, we're talking about like the finance organizations within corporations, the treasury teams, the teams that are focused on what do we do with our cash, how do we facilitate payments, those kinds of teams. This is very new to them. And while a headline grabber of a Tesla or maybe not a Tesla putting Bitcoin on the balance sheet is sort of interesting for a corporate treasurer, I think the broader theme of this is an asset class. Yes, it's an asset class that one could allocate capital to, but this is a new form of payment and treasury infrastructure, and that's a very new thing. And the adoption of products and services that are out of a new class of regulated financial institutions, such as these, crypto firms that have grown in the regulated environment. This is a whole new set of counterparties that they're dealing with. It's not necessarily, the bank that they've always done business with. And then understanding what are stable coins, are they safe? What does it really mean to use those? How are those treated? These are a lot of things that people are now getting their heads wrapped around. And so there is both education that's needed, and that's something that all of us collectively work on. It's not a single company thing at all. And then there is the importance of regulatory clarity. The good news is in the United States and in many jurisdictions, but I'll speak specifically about the United States, we've had significant amounts of regulatory guidance and clarity around stablecoins. We have a whole set of guidelines that came out of the U.S. Treasury Department late last year. We had another set of guidelines that were specifically aimed at how the banking sector can support and interact with this, including using stablecoins as on public blockchains as a viable payment infrastructure alongside things like card rails, wires, ACH transfers. You've seen stipulations from different parts of the Treasury Department, like the OCC, on how banks should hold the reserves for these. And it's something that's been supervised by state banking supervisors and other regulators in the United States now for several years. And so there is a fair amount that's there, and I expect there'll be more going forward. But for many enterprises, it's just learning about that, coming up to speed on that, so getting comfortable with just what are stablecoins and how to understand them, how do you account for them, all these things, and then secondarily getting comfortable with these emerging lending markets. For example, these are internet-based lending markets. Some of them are run through traditional centralized financial institutions that run those markets, like other forms of, say, securities lending or things like that. And then others are decentralized. I think it's the decentralized area where there's more head scratching, right? Like, what do you mean I'm lending to a protocol? What the hell does that mean? And how do I get comfortable with that? And then actually when you start to educate institutions more, you're actually able to say, this is a radical breakthrough. You're actually lending to a risk management infrastructure that's completely public, transparent, and auditable at all times. You have instant redeemability. You're taking a different kind of counterparty risk than when you lob a wire into another institution and you hope it comes back. And so there's some really exciting things to educate people on, and I think that's part of what makes DeFi so exciting. Is it is a real shift in risk management and how companies can interact with capital market infrastructure.
So, the U.S. obviously seems like has made a lot of kind of clarity or improved clarity around stablecoins. Is there any sort of global jurisdiction that you would point to and say that country there, that's the benchmark that we need to beat in terms of making the U.S. the best destination for all of this kind of innovation?
I think it's still too early to say there's a best, but I think there has been some good progress here in the US. The UK has also been out in front on this. The UK, the FCA, I think put very specific guidelines out around the treatment of stablecoins. The entire European Union, in a series of forthcoming, regulatory guidelines, MiCA, will go into force this fall. That is a EU-wide framework around stablecoins. Singapore, I think, has been proactive in this space. They've enabled, regulated issuers in this arena. And I expect that that's going to become, it's going to accelerate around the world because as you said in your introduction, I think this fundamental model of public blockchain infrastructure, private sector, innovation combined with that open source kind of technology foundation is creating a pace of innovation in payment and settlement infrastructure, which is really, really exciting. And I think most governments and really people and businesses around the world are gonna, I think, want to be able to take advantage of the benefits of that. And so as that just grows and grows in use, of course, regulators are going to want to make sure that the right consumer protections are in place, that various international anti-money laundering laws can be respected and things like that.
So the U.S. is obviously doing well. We've got a lot of this global regulation is maturing. Are we going to see from Circle Singapore dollars, euros, yen, other currencies, or is the focus going to stay on dollars for the moment?
Well, a couple of things I'd say. The USDC as a stablecoin, as a standard, is something that the governance for that standard is through Center Consortium, and Center Consortium has a published roadmap that includes expansion into multiple currencies, expansion on multiple blockchains, and you've seen this Center kind of certifying USDC on Stellar, USDC on Solana, on Algorand, and obviously you can expect to see more blockchains that have USDC as a protocol supporting them. But ultimately, the ability to transact with a fiat currency on a full reserve basis on public blockchains is something that's going to go well beyond just utilization in things like DeFi and crypto markets. It's going to be for everyday commerce, and everyday commerce is denominated in a range of major global trade currencies. And so it is absolutely something that one should expect to see from Circle over time, is support for other leading currencies that are used in trade and remittance and other categories. I think that's a really exciting development as we move from kind of the speculative value phase of crypto into the utility value phase of crypto. And that utility is really critical for every form of payment. People ask me a lot, what's the use case for a USDC? And my answer is, what's the use case for a dollar? There's a pretty broad set of use cases, and that's going to be the same thing. What's the use case for a euro or Mexican peso?
So this is actually one of the questions that we got from Reddit, and you kind of hinted at it, right? USDC now available on multiple different blockchains. Does the usage profile look different on some of the other blockchains than it does, say, on the Ethereum mainnet? Or do the use cases all look fairly similar in terms of what people are actually doing with it?
You know, it's been very interesting to see, and we're still early. A number of the new chains are relatively recent versus USDC on Ethereum, which goes back a few years. I think, you know, for example, USDC on Stellar, we've seen a range of different cross-border payment applications. And with Stellar, I think having done a really good job partnering with what they call anchors in a number of different other markets around the world to enable that cross-border settlement use case, that payment remittance type use case. So that's been an interesting one where we've seen a number of projects getting launched. USDC on Algorand has been something that has grown in trading markets, but we're also seeing really exciting growth in the use of USDC on Algorand in digital securities, in digital asset securities, where people are issuing various forms of, you know, effectively equity, debt, other types of security instruments where the stablecoin is key to how that operates. And Algorand has a number of things on their platform that makes it a really well-suited infrastructure for securities. USDC on Solana has grown a lot, really in response to a rapidly growing DeFi ecosystem that is growing on Solana, you know, which is you know, really dealing with some of the scalability, throughput, and cost efficiency challenges that Ethereum has faced. You've seen a kind of a really rich DeFi ecosystem emerge on that platform, and so that's been something that's been driving a lot of growth there. But it's interesting too, because we now, you know, have a world where you can make a USDC payment in 400 milliseconds, you know, with you know, around 1/10 of a penny of a transaction fee. That's really exciting. That really opens up a lot of different payment utility use cases.
Is there going to be a Doge dollar coin? Are we going to see that?
A Doge dollar coin. Well, people talk about how the ultimate destiny for the price of Doge is $1, and that this is Mark Cuban, who believes that once it achieves $1, that the market will continue to price it at $1. We'll see about that. I mean, Doge itself obviously is not an extensible blockchain. It is sort of a single purpose blockchain like Bitcoin is in many respects. And so maybe if Doge launches smart contracts and tokens, you might see a Doge dollar.
And if that happens, when can we expect you to host Saturday Night Live? Just want to put it in my calendar.
I think we're a ways off from that, but you know, we'll just keeping track of the growth of USDC. Maybe when we see 100 billion in circulation, we can talk about that.
Fantastic. Well, that may not be that far away. We can invite you back next year and talk about how we got to 100 billion in circulation. Any final comments, recommendations, suggestions before we wrap up for today, Jeremy?
No, I mean, I appreciate the conversation and talking about this. It's obviously a really exciting time, and if people are you know, wanting to learn more, certainly you can, you know, track us online and Twitter, and we're obviously, I think, really excited about all the work that E&Y is doing in the space and making kind of blockchain commerce something that comes alive, and excited to be part of that.
Jeremy, thank you so much for joining us. I really appreciate it.
Absolutely.
Well, ladies and gentlemen, boys and girls, everybody, this brings us to the conclusion of day one of the EY Blockchain Summit. And I hope you enjoyed it as much as I did. This was kind of incredible in terms of, I feel like getting a chance to lay out our vision, hearing from such an astonishing list of industry experts and visionaries. We had, you know, Jeremy Allaire from Circle, we had FedEx, Kona, Provide. I'm going to lose track very, very quickly. Tons of amazing people. We got a chance to do a demo. We talked about scale and safe network and kind of the future of decentralized infrastructure. If I hope you take away one thing from today, other than, wow, Paul has really cool t-shirts, and gosh, I had no idea accounting was so interesting, it's that the future is decentralized everything. Now, just to recap, tomorrow, manufacturing and public sector. So we're going to talk about how in detail. And I really want to emphasize, these are classes. These are the classes that we would teach our own people how to understand and work through blockchain technology. So these are classes that are getting in depth. Tomorrow, we're starting with manufacturing and public sector. We're going to be talking about public finance manager, how you deliver and tokenize and manage accountability in large public sector projects, how you define assets and deploy them when you're dealing in the manufacturing industry. Thursday, finance, tax, and accounting, deep dives into DeFi ecosystems, assurance, and tax. And then Friday, a deep dive into privacy, security, and scalability. So come back, join us for the other days. This evening, after this is over, we will be publishing later today. This will be available in full replay on YouTube. And we will also, when we have a chance over the next day or two, put up all the presentations that we received during the course of this day. Will be in the Blockchain Summit event. And we will also be checking in on the AMA threads on Reddit in the ETH Finance Forum. And I want to again thank JT Nickel and the ETH Finance moderation team for their participation today, and Superfizz for his joining us as well. Now, I have a long list, way longer than I can possibly go through, of all the people who deserve my gratitude for what was already an excellent day with a lot of participation. And so with that, we did put together some rolling credits to share with you the people who are very much deserving of our thanks. We almost certainly missed some people, and so I apologize in advance, but this has been incredible. We're not even done. We're really just getting started. And thank you all, and see you tomorrow with a new t-shirt. So Wasim, let's go to the closing credits. Thank you.